Meeting number 37, which will be the first of three panels today. Meeting 37 of the House of Commons Standing Committee on Finance. Pursuant to the order of reference from the House, we're meeting on the government's response to the COVID-19 pandemic. Today's meeting is taking place by video conference, and the proceedings will be made available via the House of Commons website. And today we are fortunate to have the governor and a senior deputy governor of the Bank of Canada with us. Welcome to Mr. Tiff Macklem and Miss Carolyn Wilkins. New in the job, Mr. Macklem, but not new to the Bank of Canada. So the floor is yours. We'll give you about, if you could keep it to 10 minutes or less, and then we'll go to a series of questions. So congratulations on the job, and welcome to the Finance Committee. We look forward to your presentation.
Well, thank you, Chair, and good afternoon, Chair and committee members. It is an honor to appear before you as the 10th Governor of the Bank of Canada. I look forward to working with parliamentarians over the next 7 years through regular appearances before the committees of the House and the Senate. These are an important part of the bank's accountability to Canadians. Today, Senior Deputy Governor Wilkins and I are pleased to be here as part of your study of the government's response to the COVID-19 pandemic. We are particularly looking forward to your questions and feedback on the foremost concerns of Canadians at this very difficult time. La Banque du Canada est résolue à contribuer le plus.
The Bank of Canada is committed to doing everything we can to help the Canadian economy recover from the enormous impact of COVID-19. Today, I will talk about the bank's four main functions and elaborate on how the bank is responding to the pandemic. Then, I will say just a few words about our operations in general. And after that, we will be happy to answer your questions. Let me begin with our most visible and tangible function, our banknotes. As a central bank, we provide a public good through a universally accepted means of payment. It is the Bank of Canada's job to provide Canadians with safe, secure, high-quality banknotes that they can use with confidence.
We know COVID-19 has changed the relationship some Canadians are having with cash, at least temporarily. About a third of Canadians say they are using banknotes less frequently during the pandemic. And we know that some retailers are asking Canadians to use electronic payments instead of cash. The bank strongly advocates that retailers accept cash for two reasons. First, some Canadians don't have a bank account, and many others have accounts that limit the number of debit transactions or subject them to fees. These are often Canadians who are particularly vulnerable economically, and they depend on cash to make essential purchases. Refusing cash puts an unfair burden on Canadians who don't have the same ease of access to financial services that the rest of us take for granted. Second, it's important to note that handling banknotes is no more risky in terms of virus transmission than touching other common surfaces. Because the banknotes are made of polymer, they can be cleaned with soap and water. During this pandemic, public health authorities have stressed to Canadians the importance of hand washing. We should all follow this advice, including those that handle cash. La pandémie pourra accélérer la tendance selon laquelle
the pandemic may be accelerating an established trend where Canadians are using banknotes less relative to electronic payments. About 1 in 10 Canadians claims not to use cash at all. At the same time, the number of banknotes in circulation continues to grow along with demand. The bank will continue to watch closely to see how the demand for cash evolves, and we will be ready to supply all the banknotes that people and businesses want to hold.
Related to these trends in banknotes use, We have also been looking closely at the idea of a central bank digital currency. And earlier this year, Deputy Governor Tim Lane spoke about the circumstances when it might make sense for the Bank of Canada to issue its own digital currency. This includes a situation in which most Canadians stopped using banknotes. We don't believe that a digital currency is required at this time, but we are moving forward with contingency planning so that if we ever judge that we should issue a digital currency, we would be ready. The second function I will mention is our funds management role. The bank is the fiscal agent of the government. We advise the government on strategies for its debt and cash management, and we conduct auctions for federal government bonds and treasury bills. We also provide banking services to some financial institutions, crown corporations, other central banks, and international financial institutions. This is an important function in regular times. We help the government manage its finances in a cost-effective way. But this function has taken on added importance during the pandemic. The government's financing needs have increased at an unprecedented pace this fiscal year with the introduction of needed measures to reduce the pandemic's impact on the Canadian economy. I note even with this record issuance, Canada's net debt to GDP ratio remains the lowest among G7 countries. Because interest rates on government Canada debt serve as the benchmark for many financial markets, it is imperative to keep the government bond markets working well. To do this, the bank has implemented a number of extraordinary measures, and this brings me to our financial system function. Our third function is the promotion of a stable and efficient financial system. The bank is unique in that it has a system-wide perspective on the stability and efficiency of the system. We bring this perspective to our work with federal and provincial partners to make sure the financial system is working well to support the real economy. Credit is the lifeblood of modern market-based economies. In a crisis, central banks have a critical imperative to provide the liquidity the financial system needs to keep credit flowing. This traditional role of central banks goes back hundreds of years. In the 1800s, British journalist Walter Bagehot famously said that in a crisis, a central bank should lend freely at a penalty rate against good collateral. What he meant was that a central bank should always be ready to make sure the financial system has sufficient cash or liquidity during times of stress so that it can help the economy weather the storm rather than becoming a headwind itself. Le début de la pandémie a
The onset of the COVID-19 pandemic was hugely disruptive to many vital financial markets. Liquidity disappeared from markets as participants sought to protect their own liquidity by increasing their cash holdings. Amid the uncertainty, credit markets began to seize up. The bank's priority from March to May was to restore proper functioning to financial markets so that Canadian households, businesses, and governments could access credit to withstand the crisis. This should also help set the stage for recovery.
Under the leadership of my predecessor, Governor Poulos, as well as Senior Deputy Governor Wilkins, the bank did an outstanding job restoring the smooth functioning of key markets, ensuring ample funding and market liquidity. The bank revived some emergency programs used during the global financial crisis over a decade ago, and it brought into operation several new measures with remarkable speed and precision. We are pleased to report that demand for liquidity is returning to normal levels and market functioning has improved considerably. The bank has therefore scaled back the frequency of some operations because financial market participants are not using them. We stand ready to ramp up these programs again if they are needed. Finally, let me say a few words about the conduct of monetary policy. Our framework is set out in the inflation targeting agreement established with the government and renewed every 5 years. The agreement sends an important signal that the democratically elected government and the bank are agreed on our policy goal, while giving the bank the operational independence to pursue that goal. This independence is crucial, both in normal times and in crisis times. Through this pandemic, the Bank of Canada, the government, and financial crown corporations and agencies have all been working closely and collaboratively to stabilize the financial system, keep credit flowing, and support the economy. The bank's actions are designed to complement the government's fiscal efforts. At the same time, we're cognizant of each other's mandates, and the government has made it clear that it fully respects our independence. As governor, I will protect the bank's ability to act independently, consistent with our mandate, because that independence is critical to the confidence that Canadians place in us, the credibility of our inflation target, and our capacity to achieve it. Under our policy framework, our mandate is to provide low, stable, and predictable inflation. That's the best contribution we can make to the country's economic and financial welfare. Achieving our inflation goals lays the foundation for sustainable economic growth, and keeping inflation close to its target means the economy is running close to capacity with full employment. Our inflation target takes on added importance during a time of crisis. As the bank moves into uncharted waters using tools it has not deployed before, the inflation target remains our beacon. Our monetary policy actions are anchored in the goal of bringing inflation back to target by helping the economy return to its potential capacity and full employment. COVID-19 and the measures to contain it represent an economic shock of unprecedented size and scope to our economy. By April, more than 3 million Canadians lost their jobs, and another 3.4 million were working fewer than half their regular hours. With containment measures starting to lift in some parts of the country, we saw a resumption of job growth at a national level in May. We expect this to accelerate as the economy continues to reopen, but we have a long way to go, and not all the jobs are going to come back. Important fiscal efforts are keeping as many Canadians as possible attached to their jobs and helping households and companies make it through the crisis. These efforts are supporting Canadians now and will position the economy for recovery. In our latest interest rate announcement, we said we expect economic growth to resume in the third quarter. And with market functioning improved and containment restrictions easing, the bank's focus will shift to supporting the resumption of growth in output and employment. The July Monetary Policy Report will provide our updated assessment of the outlook for output and inflation. Given the unknown course of the pandemic, I expect this will be more of a scenario than a forecast, and it will also include discussion of the key risks. La politique monétaire va continuer.
While our monetary policy will continue to be grounded in our inflation targeting framework, we acknowledge that the Consumer Price Index isn't currently giving an accurate picture of inflation for many Canadians. Buying patterns and prices have changed drastically during the pandemic. Bank staff have been working with Statistics Canada to better understand the implications of these changes in buying patterns.
The bank has acted decisively by bringing the policy interest rate to its effective lower bound of 25 basis points. We've also begun large-scale asset purchases. As such, we are using our balance sheet to keep core funding markets working well and to deliver monetary stimulus to support economic recovery. We have committed to continue purchases of Government of Canada bonds until the recovery is well underway. Any further policy actions would be calibrated to provide the necessary degree of monetary accommodation required to achieve our inflation target. Let me conclude with a few words about the bank's operations. Currently, the vast majority of the bank staff are working from home. This is a testament to the flexibility and resilience of the bank systems and its people. A handful of essential workers are on site, including security staff, IT staff, traders, bank operations colleagues at our head office, as well as staff at our backup site in Calgary and our regional operations centers. Bank staff are delivering for Canadians, and I am confident this will continue. The bank has a long tradition of ensuring accountability and transparency, and we are committed to building on this. We will maintain our momentum in a couple of areas. First, we recognize that all Canadians have a right to understand what the central bank is doing and why. This is even more important today as we undertake unprecedented policy actions. We will be transparent about the results of our asset purchase programs, and we will continue to promote the use of plain language to help demystify our operations for interested Canadians. Ensuite, nous avons intensifié nos efforts pour mobiliser.
Second, we have stepped up efforts to engage with a wide variety of stakeholder groups beyond our traditional partners. Our goals are to reach Canadians directly and increase public knowledge of and participation in our activities in order to broaden understanding of our work and to build trust. A number of activities to engage the public are upcoming or already underway. These include an online campaign targeting framework. And we have also just concluded a campaign inviting the public to nominate an iconic Canadian to be featured on the next $5 note.
Chair and Senior Deputy Governor. Oh, I have to go back to English, sorry.
Thank you very much.
Let me stop there, Chair, and Senior Deputy Governor Wilkins and I would be pleased to take your questions.
Thank you. And again, thank you both for coming, and thank you for those remarks, Governor Meklem. The lineup for the first 6-minute round will be Mr. Poilievre, Mr. Fraser, Mr. St. Marie, and Mr. Julian. The floor is yours, Pierre.
Congratulations, Governor, on your appointment. Your predecessor testified before this committee not long ago, and when asked about the possibility of inflation, something that many Canadians are worried about given that the bank has created almost $400 billion out of thin air in the last roughly 100 days, he replied that inflation would be a good problem because we know what to do if it arises. What would you do if inflation turns out to be higher than the central bank originally expected over the next year or two?
Governor.
I recognize that there is some concern about the extraordinary actions the Bank of Canada have taken. During the 2008-2009 global financial crisis, the U.S. Federal Reserve embarked on a aggressive strategy of quantitative easing, large-scale asset purchases. And at that time, there was concern that that would cause inflation in the United States. It did not cause inflation in the United States. In fact, it prevented disinflation and kept inflation reasonably well anchored on their 2% target.
Sorry, it's just that we don't have a lot of time. The question is, what if there is an unexpected rise in inflation? What would you do to combat it?
If there is an unexpected rise in inflation, and I don't anticipate that that's going to happen, but if that were to happen, we have all the tools, as Governor Polo's indicated. Well, we can raise interest rates.
There you go. Raise interest rates. Now, we have, as of 2018, according to the IMF, $3.56 of debt for every dollar of economic output in this country. That number is surely higher today. And that, of course, includes household, government, and corporate debt. In the G7 only, Japan is higher than Canada when you take into account household, corporate, and governmental debt. How much of an interest rate hike could the average Canadian household sustain before they would be unable to pay their mortgages or other credit market debt that they hold?
Just to interrupt for a sec, we will give you ample time to answer, Governor. We've got 2 hours here, so we'll give you ample time to answer. Go ahead.
Well, I want to stress that our focus is on supporting the recovery. The Bank of Canada has lowered interest rates to the effective lower bound of 25 basis points. We have embarked on a strategy of large-scale asset purchases, and that has a dual purpose, partly to restore, one purpose is to restore good functioning in our debt markets. The other purpose is to lower interest rates out the yield curve.
Sorry,
and we're very so.
Mr. Poilievre, the governor has at least 20 more seconds to equal your time, even.
For
and
now,
this is a crucial issue. So go ahead.
For
Governor.
now, and for the foreseeable future, we're focused on providing the monetary stimulus and delivering low interest rates to support the recovery. And that is lowering the debt service costs that households face, and companies and governments.
How many households would become insolvent with a 2 percentage point increase in interest rates?
Governor?
These questions are extremely hypothetical. We have no intention of raising interest rates in the current circumstance.
Of course not. That's why I'm not asking about the current circumstance. I'm asking about the medium-term circumstance, sir. You've admitted that if inflation rises unexpectedly, that you would raise interest rates. Those were your words. You said that. And we need to, as Canadian parliamentarians, to know what that would do to households. How many would become insolvent if you had a 2% increase in interest rates?
The biggest risk to Canadians coming insolvent is not having a job.
Right.
The biggest risk to Canadians not being able to repay their mortgage is not having a job.
Right.
The government of Canada has delivered an extraordinary amount of support to help bridge Canadians through this. A monetary policy has lowered interest rates to reduce the interest rate costs that Canadians are facing.
All right. So
and that is the best contribution we can make to getting Canadians back to work, which is the best thing we can do to improve.
So, Mr. Chair, sorry, we're well over
insolvent
in the response time. So it doesn't sound like you have planned for the prospect of future interest rate hikes, and doesn't sound like you've modeled out what impact they would have on households. I want to return to a paper you wrote in 1995 about government debt. And you said, in particular, higher debt levels require higher tax rates to be sustained. And taxes affect economic activity by driving a wedge between the price the sellers receive and the price the buyers pay. The wedge imposes an efficiency cost on the economy that is larger the higher the taxes are. In labor markets, for example, most studies find that the effect of higher taxes is to reduce desired labor supply, and the disincentive effects of taxation are larger the higher marginal tax rates are. In other words, higher taxes, less jobs. Higher taxes, less work. That's what you wrote. I'm wondering if your recent appointment has changed your mind and your perspective on this, and if you've reversed yourself in order to align with the high debt and high tax policies of this government, or if you've retained the view that you had in that paper.
Thank you. That'll end the questions. Mr. Governor, you have about a minute to answer. Go ahead.
Well, fiscal policy is the purview of the Minister of Finance. What I wrote as an economist in the 1990s.
For the Bank of Canada.
I stand by it. I stand by what I wrote. I would remind you, though, that the situation in the 1990s was very different. In the 1991-92 recession, Canada had a very very high debt situation, and as a result, the government was unable to provide the kind of stimulus and enforce. And of course, coming out of it, there was a large fiscal consolidation. Today, the situation is very different. We are reaping the benefits of starting from a very good fiscal situation, and the government is in a position to provide needed stimulus.
Okay, thank you, Mr. Fraser. 6 minutes or thereabouts. We do have ample time, and I want people to be able to have the time to clearly articulate their views. This is an important subject. Mr. Fraser.
I'll do my best to give the witness time and focus on real world examples where possible. Look, there's a point I want to pick up on from my colleague, Mr. Poilievre, and it seems as though he wasn't listening to Mr. Milligan's, Professor Milligan's testimony before this committee, who pointed out very eloquently that it wasn't government decisions that led to increased cost to Canadians. It was the fact that we have a global pandemic that created a certain cost. And in fact, the government's response is probably one of the best ways to mitigate the social costs of that pandemic. From there, we heard testimony from other economists who suggested that the federal government is perhaps best to positioned to incur some of the debt that this virus has caused in order to, again, mitigate those social consequences. Your predecessor, when he testified, did make the same point that if anything, this pandemic is likely to have a deflationary effect, and that if there was some inflation, that might actually help the economy in these scenarios. But coming back to the point that Mr. Poilievre led on, which is really the risk that a higher interest rate could potentially have. I'm curious, you've mentioned that you don't believe there is a risk at present of that kind of an economic consequence. But why is that? Are there strategic risks we should be turning our mind to that could cause a sudden and unexpected hike in the rate of inflation, or more importantly, for the purpose of this line of questioning, the rate of interest?
Well, I think the bigger risk is falling inflation and even deflation.
Mm-hmm.
And for two reasons, we are more concerned about the risk of deflation than inflation. First of all, deflation is particularly harmful to an economy, particularly an economy with high levels of household indebtedness, because the real value of people's debts goes up and their ability to service those debts goes down. And that's why I was saying they're more likely to become insolvent in that situation. Secondly, we're already in a position with our policy rate at the effective lower bound of 25 basis points. Interest rates across the yield curve are already very low, so there's only so much monetary stimulus space available. And so for both those reasons, you want to really guard against falling inflation and particularly deflation. We're starting across Canada to see the containment measures coming off. And with that, supply is being reopened, and we're starting to see people being called back to work. We're starting to see people make purchases, but given that we've lost roughly 3 million jobs, we've got about 290,000 of those back. So we're still down 2.7 million jobs. You can expect that the purchasing power, the confidence of Canadians is going to be severely impacted by this. And that is going to reduce demand more than supply, which will put downward pressure on inflation. And so our actions are really designed to bring inflation back to target. And the way to do that is to support employment and output growth.
So I would like to come back, if there's time, to the issue of whether there are risks we need to be worried about on the other side of the equation. But for now, I have a limited amount of time, and I'll pivot in my line of questioning. Of course, you were heavily involved with the expert panel on sustainable finance, and you made a point that I think is important in your new role about the independence of the bank. Obviously, helping transition towards a greener economy and a more sustainable economy is something that was necessary, in my view, before the pandemic arose. But I'm curious, there's been an enormous coordination between OSFI, the bank, and the federal government in the pandemic response. On the issue of sustainable finance or economic growth more broadly, how can we continue to see that level of coordination that does not interfere with the independence of the bank, but allows Canada to position itself most competitively to take advantages of the opportunities that were flagged in the expert panel's report on sustainable finance?
Well, I'm glad you've seen our report. I will underline at the outset that when I chaired that panel, I was Dean of the Rotman School of Management, and together with the other expert panel members, we delivered that panel to the Minister of Finance and to the Minister of the Environment, and it's really up to them now to decide what to do with those recommendations. I do think that responding to climate change is going to take whole of government, whole of economy effort. It's going to take, it's going to take the public sector. Importantly, it's going to take the private sector. Ultimately, the private sector does most of the production in this economy, and they have a very important role to play too. I'm going to ask my colleague, Deputy Governor Wilkins, to say a few words on the bank's research and strategy around climate change. But I will just underline that climate change is a big force on the economy, and it's going to be accelerating. And we at the bank are going to have to accelerate the work we're doing, as our as our other organizations, as is the private sector. Senior Deputy Governor Wilkins, do you want to say a few words about our strategy?
Absolutely, Governor. So we do, thank you, Chair. We do have quite an extensive work program that's aimed, just as you suggest, to complement the work that's done by governments, but also by the private sector in areas that you would think about. The physical risks are the ones that are most palpable for people, because when they live them, they're affecting their daily lives. But clearly those risks, including exposures of financial institutions to physical risks, the disruptions that we've seen to economic activity, are important for us to understand. We're doing work as well on the risks of the transition. And so transition to a low carbon economy can change relative values of asset prices. It could change which sectors do better than others, and that can present risks to the financial system that we need to understand and get ready for. And that's a perfect opportunity for us. We're not a bank regulator, but for us to work with OSFI and our private sector partners on trying to understand how to get the right data and do the right analysis so that we are ready for that. And then, of course, there's this understanding how the macroeconomy is going to change. We tend to think about these risks as being, or the transition as being only one-sided, kind of downside, but in fact, there's lots of opportunities. Farmers, for example, can invest in big data, and they're doing that to improve their crop yields, and at the same time reduce their fuel consumption. These kind of changes in the macroeconomy affect how monetary policy might work, where the jobs are going to be, and again, we need to work with our counterparties to understand those as well. And finally, we've got our own job to do with our own business, making sure that we work to have the carbon footprint that we're happy with, and we're committed to doing that, and with that, building in the right amount of transparency over time.
Okay.
Thank you, Mr. Chair. If I can get 5 seconds, if you're looking for my feedback on the $5 bill, I hope you're thinking about Terry Fox. Thank you.
Thank you for that.
Okay. Mr. St. Marie, who will be followed by Mr. Julian. Gabriel, floor is yours.
Merci, Monsieur.
Thank you. Congratulations, Governor, and welcome to the committee. And Mrs. Wilkins, hello, and thank you once again for appearing before the committee. I would like to begin for suggesting with the $5 banknote. I would suggest the chair of our committee, Mr. So let's get to business. Economists, Stiglitz and Rashid, are concerned with the following, and I'd like to have your reaction, Governor Macklem, about this. The budgetary measures and monetary measures that have been implemented during COVID-19, a lot of them don't have anything to do with are increasing reserves, rather. And so you referred to this briefly in your speech. So what economists are saying is that this brings forth the following paradox. We risk to find ourselves with a massive increase of the monetary mass, but we would have a weak use of this liquidity by households and businesses. And economists are concerned that there might be a speculative bubble on the stock market linked to this, given that there's a lot of money that's available, a lot of banknotes, unused banknotes available that are not being used by consumers and businesses, and this could create a speculative bubble. I'd like to have your comments and your analysis with regards to this concern.
Vous avez raison.
You're right. There's a lot of uncertainty right now, and we're using tools that we've never used before here in Canada. It is true that it's very difficult to anticipate all the effects linked to the use of these tools. So what the data is showing us right now is that the fiscal extension has supported household revenues and has replaced part of people's revenue due to COVID-19. So the fiscal measures have done that. And probably because households don't usually go to stores, they have seen an increase in their savings as well, because consumers are not shopping. So this is a bit of a good news story, because what we see is that households are reducing their debt. We've seen this and are now positioned with purchasing power. So I do agree that there is a risk that households will lack confidence and won't spend. And their savings rate might increase further. And this highlights the importance of reestablishing confidence among households, and even more important than confidence is to have a job, is to have revenue, to have a predictable income. When households have this confidence, and what we've seen is that when they have confidence, especially with lower interest rates, they're able to borrow and spend. And this will strongly boost the economy. So yes, there are risks, and we will do our best to manage the risks. And fiscal measures play a huge role, because this creates conditions for an economic relaunch. Yes, thank you for answering me in French. So my second question is the parallel between what your predecessor, Mr. Poulos, told us during his appearance before the committee last time, and what he said at the time is that it's very important to implement budgetary policies, fiscal policies, because of the role that the Bank of Canada and the central bank can play in such a crisis. The tools are heavily used already. Interest rates are already low. The previous governor had closed the door to the use of negative interest rates. And with fiscal policy, Mr. Poulos was highly critical of the EI regime from the beginning. This is a regime to ensure that workers who lose their job keep their revenue. And this collapsed, and it brought forth the necessary CERB and also the wage subsidy program. Do you think once the pandemic will have passed, do you think we should overhaul the current EI program, as was suggested by your predecessor? Thank you. Questions with regards to employment insurance really should be asked to the Minister of Finance. It's a very important system, and what we've found following this crisis is that it's not sufficient in a crisis. And the government, therefore, had to implement emergency measures. These new programs, well, the idea is that they are temporary programs during a crisis. But as for the future evolution of EI, that's up to the Government of Canada. Okay, thank you. Also,
Time.
Okay,
thank you both. Turning to Mr. Julian, who will be followed by Mr. Morantz. Peter?
Thanks very much, Mr. Chair, and I second the motion for a $5 banknote with your face on it.
Yeah, I imagine.
Hopefully I'll get more time. Governor Macklem, Deputy Governor Wilkins, thank you very much for being here today. We hope your families are safe and healthy, and congratulations, Governor Macklem. It's great to have you for your first visit in your new role at Finance, and certainly we'll be hearing from you regularly. We appreciate that. Your quote earlier, the biggest risk to Canadians is not having a job, is an important one, because we are in a situation where certainly on the ground, and I can tell you, speaking to you from New Westminster, Burnaby in British Columbia, that the issue of liquidity is a big problem. I want to start off by asking what you believe the sum total of supports to the banking sector has been from the Bank of Canada. And secondly, we asked the same question of OSFI a couple of weeks ago, and they came back with a figure of $750 billion in overall supports for the banking sector, particularly Canada's big banks, through the IMPP, through the Bank of Canada, and through OSFI itself. And yet, when we look at other countries where there have been supports putting in place for the banking sector, that has come with conditions, either through the bank or through the financial regulator. I'm thinking of the Bank of England, stopping things like dividend payments, executive bonuses, making sure that there can't be stock buybacks. So why are there no conditions attached to what is a significant amount of support going to the banking sector? And what's your evaluation of the Bank of Canada's contribution to Canada's big banks and the banking sector generally since the beginning of the pandemic?
Well, I'm going to ask Deputy Governor Wilkins to start and answer that question. She was very directly involved in the setting up of a series of new programs the Bank of Canada has brought into place. The scale of those programs goes up every week, and she can give you the latest numbers.
Deputy Governor?
Thank you. That's an excellent question, because it does highlight the fact that it is a team effort in terms of supporting the financial system. The total amount that we've done so far amounts to $341 billion, and that's outstanding. Of course, some of those activities that we've done have matured, so the peak was somewhat higher than that. But that's how much is in there. It seems like a very abstract number, though, and so if I could just take a second to talk about what is that money doing and what's the purpose of it. And at the end of the day, it's really to help households and businesses better deal with the financial hardship that they might be feeling right now, but also to pave the way to a recovery that's sustainable. And the governor spoke about that right at the very beginning. And so our activities range from providing short-term funding to financial institutions, to corporations, provinces, municipalities, to outright purchases of assets of a longer term. So for corporate bonds, it could be corporate bonds with a remaining tenure of less than 5 years. And the reason that we do that is really to support those markets so that the private sector can also participate in a market that's more stable, that functions better. And when that happens, that means that businesses have the working capital they need. It means that if households or businesses need to use their line of credit, which they have had to do, the banks are there for them as much as they can be. and so on, and that complements some of the actions that CMHC has made in terms of their IMP program, and OSFI has made in terms of reducing the countercyclical capital buffer. With respect to the decision of the restrictions to place on banks, their dividends versus their buybacks, that's out of the Bank of Canada's purview, and I think the only thing I would add before I turn it back to the governor is to say that that's a decision of OSFI, and it needs to be taken into in the context of the fact that banks always have extra buffer in their capital than what they need as a regulatory requirement, and that can be seen as a restriction on dividends the whole time. So I'm going to turn it back to.
Sorry, yeah. So I thank you very much for that. I guess the concern in the public's mind, of course, the big banks have had over $5 billion in profits so far during this pandemic. And anecdotally, businesses are not getting access to liquidity. We're not seeing that trickle down into the community. And in fact, in many respects, the programs where businesses are accessing loans are ones where the government of Canada has basically picked up through BDC and EDC 80% of the guarantees. So what we have is the banks taking that massive amount of support, unprecedented amount of support. It's not trickling down, and the loans they seem to be giving are ones that are already being guaranteed and underwritten by the government of Canada. Does that worry you that this doesn't seem to be working, all this massive amount of supports to Canada's big banks, except for them, of course?
Governor.
Well, look, Deputy Governor Wilkins and I are not here to defend the banks. But let me just say a few things. First of all, as Senior Deputy Governor highlighted, OSFI regulates the banks. They have imposed some restrictions. The banks can't increase dividends. They can't increase buybacks. And the restrictions that OSFI has imposed, we're not the U.S. We're not the U.K. They're imposing restrictions that are appropriate for Canada. With respect to the response of the banks, this crisis, it's worth underlining, this crisis is very different from the one we faced in 08 and 09. That was a financial crisis. And banks, particularly in the US and in Europe, were very much at the center of that crisis. There was a huge credit crunch. That's what caused the recession. This crisis, and in the last dozen years since the financial crisis, there has been a tremendous reform effort in the financial system, and hundreds of billions of dollars of additional capital have been built up. Liquidity is much reinforced. Leverage is much lower, and that has put the financial system in a position this time to be part of the solution as opposed to the problem. And banks in Canada, look, I recognize that not every person feels like they've been well treated, and they're not happy with the pricing, and they found the negotiation with their bank unpleasant. But banks in Canada have deferred 700,000 mortgages. They have increased business credit substantially. Loan growth to businesses is up about 30%. Loan growth to households is actually down, which really reflects what I was talking about earlier. Households, the government has replaced the income that households have lost. Household savings are going up. They're not shopping as much, certainly not for large purchases. So their credit growth actually has slowed. But for businesses, banks have dramatically increased their loans to businesses to help businesses bridge across that. And from the Bank of Canada's part, by lowering our policy rate and by embarking on large-scale asset purchases that have lowered yields out the curve, the cost of those loans to businesses has gone down. Business loans are down about an average. The interest rate is reduced by about an average of about 140 basis points. Okay. So it's not perfect, but they are providing part of the solution.
Okay, thank you all. We are quite substantially over on that round. Mr. Morantz, and then on to Mr. Fragaskatas. Marty?
Thank you, Mr.
5-minute
Chair.
round.
Thank you, Mr. Chair, and congratulations on your appointment, Governor. I want to just circle back to the question of interest rates. And the reason I want to do that is when it comes to basically the relationship, if you will, that millions of Canadians have with the Bank of Canada, whether they realize it or not, it comes down to the interest rate, because that's what affects their pocketbook. Now, you said at the beginning that the overnight rate at 0.25% was the lower bound. The lower boundary of the rate. And you also said that you don't anticipate rates going up at all. So are you of the view basically that it's going to be 0.25 for a long period of time? How long might that be?
Well, we're not here today to take monetary policy decisions. As I indicated in my opening statement, the focus in the initial months of the crisis was very much on restoring orderly market conditions, and we are pleased to see that market conditions are normalizing. And so with that, we are turning our focus more to monetary policy. And an important step in that regard will be the publication of our monetary policy report in July, where we will provide an outlook for the Canadian economy, recognizing there is still a lot of uncertainty, particularly around the evolution of the pandemic. I imagine it's going to be more of a scenario, possibly with some risk scenarios around that. But it will provide us a planning scenario, which will be important for the calibration of monetary policy, because as you're aware, what we do today affects inflation with some lag, and so we have to look forward. So those are the things that, that's sort of the next step in the process to determine how much monetary stimulus will be needed and help us figure out for how long. But,
so is your inflation target still going to be 2%, or are you going to be changing that target?
The target has been 2%, and I'm going to ask Deputy Governor Wilkins to say a word about our research program related to renewal. The target has been 2% for close to 30 years now, and it has served Canada and Canadians extremely well. We are one of the I think strengths of our inflation targeting regime is that we do review it every 5 years, and we are in the process right now of reviewing it, and we are and will be consulting with a broader range of Canadians on that. And I'll ask Senior Deputy Wilkins to say a few words about our research in that area.
Sure. I'll be brief because we've spoken at length about this in different venues. We're conducting an extensive research program, which is doing if you like, a horse race between different monetary policy frameworks, one of which is the one we have today, 2% inflation targeting. Examples of others are a dual mandate, so something similar to what they have in the US that also looks at not only inflation, but full employment, price level targeting, among others. We've got a set of clear criteria for choosing which one seems to be best, knowing well, as the governor just said, that 2% has served us extremely well. And those criteria are really how well do they serve Canadians in terms of stabilizing the labor market, stabilizing production, and will they stand the test of time in different kinds of environments like the one we have today? We're expecting to consult widely with Canadians. You'll start to see our research work out there, and the objective is to have an agreement signed with the government in 2021.
Mr. Morantz, go ahead. We'll give you another minute, Marty.
Back to the governor. I'm having a little trouble understanding exactly what the reticence is around discussing interest rates. You seem not really quite ready to go there. You have said in this meeting that you have no plans to raise them. They're at the lower bound. are interest rates going to stay at that lower bound, or do you think they're going to rise? One of the other things that plays into this is, and you mentioned it earlier with the mortgage deferrals, many people have discussed now or described what they see as the deferral cliff. So I don't think we're anywhere near the end of this crisis in terms from a monetary perspective. How long can the bank keep this up and not have to deal with the possibility of inflation?
Yeah, Governor, the floor is yours, but we don't expect you to come to this committee and get into speculation. This is not the place for it, I do not believe. Governor, the floor is yours.
Well, thank you, Chair. I can either give you a very long answer or a very short answer, but I think the chair wants me to give you a short answer. So, I
just want to say, Mr. This isn't speculation. Your immediate predecessor in this committee only a few weeks ago said, and I quote, "Interest rates will certainly go up." So pardon me if this isn't a real question that I think you should be answering. Do you think they'll certainly go up as well? That's not speculation. That's the opinion of your predecessor. What do you think?
Over time. Go ahead, Governor.
Someday we will get through this. The economy will be recovered, and interest rates will, start to move back to more normal levels. But we're in a deep hole, and it's going to be a long way out of this hole.
Okay, with that, thank you all. We'll turn to Mr. Fragiskatis and then on to Mr. Cumming. Peter.
Thank you very much, Mr. Chair. Governor, congratulations on your appointment. Deputy Governor, it's great to have you back at Finance Committee. My friend, Mr. Poilievre, talked about insolvency. I want to ask you about insolvency, but in a different way, and you'll indulge me if you could. It is a hypothetical question. I realize that, but I think it's an important question.
I don't like hypothetical questions.
Okay. Well,
I will tell you that up front.
I haven't asked it yet. I don't
Okay,
think it's
I'm
one
listening.
that I don't think it's one that compromises your position or the bank's perspective. But I did want to ask you, how many households would have become insolvent if the Bank of Canada did not take the measures it took to secure and stabilize the Canadian economy and to protect Canadians by extension? And how many households would have been in a difficult position if the Canadian government did not introduce the various programs it introduced? This includes the CERB, the wage subsidy, the Canada Emergency Business Account. Do you have any thoughts on that, Governor?
I don't have the precise numbers that you're asking for. As we start to revise our, as we start to come to kind of a base case or central scenario for the economy going forward, with the economy is now stabilized. We've last month of May, we saw some job growth. We are expecting that to pick up. So we are now in a position to start thinking about the path of the economy going forward. And as we do that, we can start looking at the we can start evaluating the effects of different policies. But I think it's a bit premature. I don't have those numbers. Senior Deputy Governor Wilkins does have some information, I think, from the.
Well, I appreciate that, but let me put the question another way. And I realize I'm not expecting you to have numbers on this, not you, Governor, not you, Deputy Governor. But suppose, let's just engage in the counterfactual here. Suppose that the Bank of Canada did nothing. Suppose that the federal government did nothing in the face of COVID-19. Is the prospect of a depression possible? Because when the parliamentary budget officer testified at the committee just a few weeks ago, he described a situation that very much mirrored a depression situation. When your predecessor testified, Governor, just a few weeks back, it was the same scenario.
Yeah, I don't have precise numbers, but the big risk here, whether it's for Canadians, it's for businesses, or it's for governments, is the duration of this crisis. The longer it goes, the more painful it becomes, and the problems accumulate. And so that is why, the the government has come in very aggressively with very large programs to support businesses and households, to defer tax collections, to provide credit support through BCAP and other measures. That's why the Bank of Canada is undertaking, using tools it has never used before to support the economy. We can't change the fact that the pandemic has resulted in a very severe recession, the most severe in our lifetimes. The best we can do is do everything we can so that the bounce back is, our expectation is you'll probably see some pretty good numbers in the near term. As the economy reopens, that's going to be a bit mechanical, and there'll probably be a slower period of recuperation thereafter. What we really want to avoid is, a non-recovery, and that will create huge problems, and that's why these measures are so important.
Thank you very much. Inflation has come up a few times in this meeting, and you, I believe, know of the work of the Harvard economist Alberto Cavallo, who specializes in inflation and has taken a very nuanced approach to the study of inflation as it relates to COVID-19. In a recent paper, he wrote the following, and I just love your thoughts. Of course, he's writing in an American context, but like every other country in the world, Canada is also dealing with the economic impact of COVID-19. So I think his findings are applicable to our situation. But in any case, here's what he says. Social distancing rules and behaviors are making consumers spend relatively more on food and other categories with rising inflation in these areas. And he points to meat prices in particular as really escalating dramatically in the United States. He continues, and relatively less, consumers are spending relatively less on transportation and other categories, experiencing significant deflation in these areas. Is this something that that can apply to the Canadian context? And if it does, to what extent does that worry you?
As you point out, and I raised this actually in my opening statement, the Canadian the CPI is a basket of goods that reflects what the representative sort of household buys usually. Obviously, right now we're in a very unusual situation, and so many of the things that we normally buy, we're not buying. We're not traveling. We're not driving our cars much. What we are buying is, we're buying more food. We're at home more. We're buying more home goods, things like that. Yes, the standard measures of inflation do not capture the reality that most Canadians are facing. So we are working with StatsCan to get some measures of inflation that are more representative of what Canadians are really experiencing. Keep in mind, though, that a lot of these effects will be fairly temporary. The economy is beginning to reopen. Stores, essential stores have been open. Non-essential stores and services are beginning to reopen. People are probably going to go back and start shopping. Their basket will probably get more back to normal. But there may be some long-lasting effects, and it's going to be very important that we understand those.
Okay, thank you. Mr. Cumming will be followed by Ms. Kotrakis, who will split her time with Mr. Sabera. James.
Thank you, Chair, and welcome, Governor, and welcome to your new role. Although given the times that we're in right now, you must wonder some days, what did you get yourself into? But that being said, your predecessor we had a discussion when he last appeared on this committee about the importance of the resource industry pre-COVID, but more importantly, how important that sector was in the recovery of the economy as we go forward. Do you agree with that?
There's no question the resource sector, the oil and gas sector, is a big part of Canada's economy. And as Governor Poulos and Senior Deputy Wilkins have highlighted on a few occasions, the Canadian economy is, it's getting a double whammy. There's the COVID crisis, but we've seen a dramatic drop in both the price of oil and the demand for oil. And that is certainly affecting incomes in Canada, particularly in our oil-producing regions. We have seen some rebound in the price of oil, and WCS, actually, the Western Canada Select, is actually the spread relative to WTI is actually unusually small. So that's good news. Having said that, oil prices are still well below where they were. And the reality is global demand for oil is probably going to be lower than normal for some time to come. So it's probably going to take a while to work our way out of this. But yes, that is an important element of the Canadian economy.
Mr. Cumming. Mr. Cumming.
When your predecessor was here, the bank had purchased, I believe it was 10 billion in corporate bonds. Can you give us an indication of what that number is now?
I'm going to ask Senior Deputy Governor Wilkins to say that it'll be quite a bit bigger. The program was just getting going.
Carolyn?
Yes, you're right that the intent is to purchase up to $10 billion in corporate bonds. That program just started, and so we haven't purchased the full amount as of yet. There's about $90 million that have been purchased, and you will be able to see that on our balance sheet as time goes on. We will be very transparent about the amount of those purchases.
Okay. And along with the corporate bonds and with other bond buying, the balance sheet for the bank, it's pretty much quadrupled. How sustainable is this? Are you concerned about, how long can you keep up this size of purchase?
I'm not concerned about the size of the balance sheet. The expansion of the balance sheet is entirely necessary to implement our stabilization of the funding markets and monetary policy. If you look at our balance sheet compared to a number of other central banks, it's still relatively small, and we have significant capacity.
How concerned are you about if you increase liquidity and for the most part that is involved with the banks doing deferrals, both for consumer deferrals on mortgages and on corporate deferrals, but the capacity of the marketplace to be able to repay that deferred debt. Are you concerned that come this fall that we're going to see a fairly steep condition for both businesses and individuals to repay that deferred debt?
So with respect to the debt, look, this is a risk. And for some time, the Bank of Canada has underlined that household debt is high. The government, CMHC, have taken a number of actions to try to ensure that the debt levels of more vulnerable Canadians are not going up. We don't want to get Canadians into more debt than they can handle. And so there have been a number of what are often called macro-prudential measures that were taken by OSFI, by the government, by CMHC. There have also been some provincial initiatives with respect to the housing market. And those are helpful in making sure it's not only the level of the debt, it's who holds the debt. Some people have the capacity. What you want to do is make sure that others don't. So yes, it would have been better if we'd gone into this crisis with less household debt. But the fact that we've lowered interest rates, that is making that debt easier to service. And by the fiscal programs that are replacing the income lost are helping people service their debts. And as I said before, the most important thing to servicing your debt is having a job. And we've got to support recovery and get people back to work.
Okay, we will have to end that round there. We'll go to Ms. Katrakis, then on to Mr. Lemur, and Mr. Julian and Mr. Cooper to start the next round. Go ahead, Annie. Splitting your time with Mr. Sabara, I believe.
Yes, I am. Thank you, Mr. Chair. Congratulations on becoming the new governor of the Bank of Canada, and welcome to the Finance Committee. Hopefully your tenure will eventually become less demanding than it is at this critical time. A few weeks ago, I asked your predecessor, Mr. Poloz, if our economy, which is forecast to resume growing again in 2021, following a possible 6% decline in 2020, recover the growth lost in 2020. He was quite optimistic that we can regain growth and even recoup lost ground relatively quickly as the economy will be operating under its capacity. Given what has happened since that time with COVID-19, such as the gradual reopening of our economy, are you as optimistic as your predecessor that we can achieve strong growth? And what can the government do to ensure that we recover our lost growth and reach our full potential as quickly as possible?
Okay, well, it's a pretty big two-part question. I think I'll focus more on the first part because I think I've spoken quite a bit to the second part. With respect to the first part, I mean, since Governor Poloz and Senior Deputy Wilkins were last at this committee, we have seen that the economy has stabilized. We probably hit bottom about a month ago. We saw 290,000 new jobs on a national basis across the country in May. I think it's important to stress, though, that different provinces are opening at different speeds. So the experience, depending where you live in Canada, may be different. The other thing I would stress is that this crisis is affecting Canadians in different ways. Unfortunately, the crisis is disproportionately affecting the lowest income workers. You can see in the labor force statistics, women, recent immigrants, youth are particularly affected. Their unemployment rates have gone up the most. So I am optimistic. So the good news is we are starting to see some rebound. The economy is, the containment restrictions are coming off. I am optimistic we are going to see, we expect growth to resume in the third quarter. I think we could see some good numbers. But I would stress that, even the good case is still pretty bad. We've seen an unprecedented decline in economic activity, and it's a long way back.
Okay, thank you, Mr. Sabara.
Thank you, Chair, and thank you to my colleague for splitting some time. Again, congratulations, Governor, on your appointment. When the COVID-19 pandemic hit, it knocked off, from what I've understood, about 20% of our economy, about the Canadian economy. 20% was taken offline. Obviously, in economics, we use the term output gap in terms of measuring where Canada's output gap is. So I'd like to get your thoughts as the economy goes along. So sort of where we are in terms of that output gap, how quickly we can close that output gap. And I have a follow-up question afterwards.
Well, as I indicated previously, we are, right now the staff is updating our economic outlook. The last monetary policy report gave two quite different scenarios, one a more optimistic one a quite dire one. Now that the economy is stabilized, starting to reopen, while there's still a lot of uncertainty out there, and there's particularly a lot of uncertainty about the course of the pandemic, that range of uncertainty is narrowing, and our intention is to provide at least a central scenario in the next monetary policy report. So that will, at that point, we'll be able to say more about what the size of the output gap is. What I would say, though, is that, one thing that is very unique about this crisis is that they're both important supply and demand effects. By locking down the economy, we have shut down supply in large parts of the economy. And as that supply reopens, our expectation is that demand is not going to reopen as much as supply, so there will be a sizable output gap.
Okay.
And there's going to be a lot of uncertainty about that, but we will begin to provide some estimates.
And if I can do just a quick follow-up.
Go ahead.
The famous term liquidity trap by Keynes about deflation, and in terms of tying that in with your counterpart in the United States, Fed Chair Powell, in terms of his famous quote in the last week or so, not even thinking about raising rates. Care to come up with a famous quote this afternoon?
I wish I could be so eloquent, but I'm still a very new governor. Give me some time.
Okay. Not thinking about thinking. That's quite a line there, Francesco.
Not mine.
I know it's not yours. Mr. Lemaire will be followed by Mr. Julian, and then on to Mr. Cooper. Mr. Lemaire, 3 minutes.
Merci, Monsieur le Président.
Thank you. Congratulations for your new position. My first question, we're hearing the government remind us that the situation is too unstable to be able to present an economic update. Do you think that the situation has stabilized since the first announcements made by the government in March? The government had decisions to make, and the government has been quite transparent with regards to expenditures and the cost of these programs. They did provide an update of the expenses linked to the programs. As I mentioned, on our side, it's important to have a plan. We need to have a scenario to assess the need for a monetary stimulus. In our next review of the monetary policy, we will provide a scenario. So if I understood correctly, in April was a difficult month. March, difficult. April, more stable. Then there was a growth in the economy in May. So with what you've mentioned, the fact that there is no economic update done by the government, does this hinder your work in any way? As I was mentioning, for us, the most important thing for our review of monetary policy is the government expenses. They've been transparent on the expenses. Many expenses updates have been done when new programs have been introduced. For example, there's more in the CERB, less in the wage subsidies. What are your expectations with regards to consumer behavior after the crisis? And also, is there a change of behavior specifically with regards to the digital economy? These are hard questions. On one side, most consumers would be very pleased to return to a more normal behavior, to be able to go shopping if they'd like, to be able to do things normally as they did before the crisis. On the other hand, there will be permanent effects. For example, many people right now are ordering food and groceries online, and then it's being delivered. Many people are going to find this service to be very handy, and they will be pleased with it. You also mentioned the digital economy. I'm sure that this crisis is going to accelerate a huge trend, a huge economic trend, where new technology is changing the face of work, is changing what we do for recreational purposes, for fun. So it's quite difficult because we're at the beginning of this. We're in the beginning of this process, and it will be important to better understand what will be more permanent changes. So maybe ask this question in a future meeting, and I might be able to better answer.
So, Ms. Wilkins, you were shaking your head there. I don't know. Did you want in to give a supplementary there? Okay. Mr. Julian.
Thanks, Mr. Chair. And just a comment before I start with my questions. When $750 billion is being handed in supports to the banking sector at the same time as people with disabilities have not yet gotten a cent in this country, I think that's why there's increasing resentment. People with disabilities are trying to put food on the table, keep a roof over their head. They've received not a single dollar. $750 billion, $750 billion has gone to the banking sector with the results that I mentioned earlier. $5 billion in immediate profit so far in the pandemic. But as you mentioned, Governor Macklem, 700,000 deferred mortgages that all come with penalties and fees and compounded interest charges, which means the windfall profits for the banking sector are going to skyrocket later on in this year. So that's my comment. My question is more on the issue of climate change. And thanks for talking about the importance of a whole of economy approach. And Deputy Governor Wilkins mentioned the issue of the risks of transition. We'd like to hear how the Bank of Canada and you as new governor, how you evaluate the cost of climate change so far per year to the Canadian economy, what you think the cost is, and how do you see that growing over the next decade if we do not take the action that is required to reduce greenhouse gas emissions?
Well, Governor. I'm not going to give you any numbers, but I'll give you some different ways to evaluate that question. So as Senior Deputy Governor Wilkins highlighted, the most sort of visible, tangible risks are the costs of extreme weather events. And we're seeing that with increasing frequency in sort of the eastern half of the country. That manifests itself mostly in increased flooding particularly in the west, also in the north. It's manifest in increased forest fires. And, one way to measure the cost of that, I don't think it really captures the human cost, but you could, the Insurance Bureau of Canada can show you the quite dramatic increase that they've seen in their claims related to extreme weather over the last 20 years. With respect to the other costs, we're going to need to adapt to climate change. Some parts of climate change are irreversible. So we're going to have to invest in the ability to adapt to it. We're also going to have to invest, and we are investing, in mitigating climate change. And those investments will cost money, but not doing them is going to be a lot worse than doing them.
Mr. Julian.
Oh, you're giving me extra time,
yes,
Mr. Chair.
Yeah, I am. You give the other guys 4 minutes, so I'll give you the same. Go
wow,
ahead.
That's wonderful. Well, let's go into the issue of offshore tax havens. The Parliamentary Budgetary Officer a year ago evaluated the annual hemorrhage outside of our country and what should be tax dollars used in common. $25 billion a year, and that's a conservative estimate. He said, for the Bank of Canada, is that a concern? Do you have a position on this hemorrhaging of tax dollars overseas? It doesn't create jobs in Canada, doesn't provide that economic stimulus here that is needed. Does the Bank of Canada have a position? Have you made recommendations around that? Do you not feel that plus the complete absence of taxation for the web giants like Amazon is something that government should be dealing with?
Governor, what you can beyond what is the policy for the minister, answer what you can.
Well, I think you pretty much nailed it. I mean, these are issues for the government. These are issues for parliamentarians. These are issues for the Minister of Finance. They're not really in the purview of monetary policy.
Okay, before I go to you, Mr. Cooper, I do want to come back to the point that Peter made in the beginning on the $750 billion support to the banks, and I'll ask this to you, Governor, because I think there's some who will view that $750 billion in liquidity to the banks that it is going to the banks. Is this not money that flows through to businesses, to consumers, to others in society to make the economy run, to make the liquid capital, the capital available in these kind of times? I would like you to expand on that if you could, because I do not believe we want the impression left that the government is just dumping money into the banks. We're not. We're providing a liquidity service so they can provide loans.
Yeah,
I know, Peter, you're raising your hands, but could you answer that?
Yes, Chair. Your understanding is very clear, and I'll ask Senior Deputy Governor Wilkins in a minute to say a little bit about the evolution of those liquidity plans, but liquidity programs. Exactly as you describe, these programs from the Bank of Canada, as well as other programs, these are effectively loans. These are effectively providing funding to the banking system, precisely so it can defer mortgages, precisely so it can increase business loans. Those loans, those deferred mortgages, they have to be funded from somewhere. And particularly in March and April, funding markets were seizing up. Had the Bank of Canada not come in to provide that liquidity, which, as you said, flows through to households and businesses in the forms of loans or deferrals, there would have been a massive credit crunch in this country. And that would have seriously exacerbated the seriousness, the economic impact of this crisis on Canadians. That's why we came in. That's why the government has come in. And here's where I'm going to turn to Senior Deputy Wilkins. As conditions have begun to normalize in funding markets, our repo programs are starting to run off, and Senior Deputy Governor Wilkins can give you some numbers to give you a sense of the order of magnitude there.
Senior Governor, Deputy Governor?
Sure. Clearly, we've tailored our programs to be right-sized for the problem when it's occurring, and not replace private markets when it's not, when the problem's resolved. And so that's why our short-term lending programs, or lending for 1 year or less, or buying securities 1 year or less, have been rolled off because they were great to use when markets were dysfunctional, but when markets functioning was restored, they became expensive. And so, as we intended, banks and other market participants just started to use the regular programs, the regular private markets. I think that's extremely good news. It's trying to see how much is flowing through to people and what would have happened if we hadn't done it. You need a counterfactual. In our financial system review, we did 2 experiments. They're going to be imperfect, but I would direct you to those. There's chart 14 and 15 where we said, okay, what would arrears be in our worst scenario that we have in our monetary policy report in April for households if we had not helped banks do the deferrals, and if there were not the deferrals that had been put in place. And you could see that the arrears would have been much higher without that. We do a similar experiment saying, okay, well, what would have happened if there were no government programs to households in terms of in terms of and businesses in terms of their non-performing loans. Because that's not a good thing for the financial system, but it's not a good thing for businesses or people either. And so that's a way to get a sense of how much could we have helped. It's always hard to caveats around counterfactuals, but we've tried to do that work, and it shows that the effects are quite large. The positive effects are quite large.
Okay, thank you. We will go to Mr. Cooper, and my apologies, Michael, you were supposed to be the second questioner in your list, and I jumped over you somehow, and then we will go to Ms. Zerowitz, and I don't know if you want in. Ms. May will give you an opportunity if you want in. Okay, Michael Cooper, floor is yours.
Great. Thank you, Mr. Chair, and thank you to the Governor for appearing, and congratulations on your appointment. I just want to ask a few questions to seek an update on some of the extraordinary measures that the bank has taken to deal with truly an extraordinary set of circumstances arising from COVID-19. And in that regard, I would be curious if you could provide an update on the provincial bond purchase program and the dollar value of purchases under the program to date.
Yeah, I'm going to turn directly to Senior Deputy Governor Wilkins, who was instrumental in setting that up.
Go ahead.
So you'll recall that we set this program up to purchase bonds of a term to maturity of between 1 and 10 years across all the provinces, up to $50 billion. And to date, we have purchased $3.5 billion worth of these securities through a third-party asset manager.
Okay, and also along the lines of providing an update, could you also provide an update with respect to the Bankers Acceptance Purchase Facility?
For sure. So with respect to bankers' acceptances, again, this was set up early on when markets were not functioning very well, and we agreed to purchase a certain amount a week of bankers' acceptances. Right now, we have only $3.7 billion on our balance sheet. Much of our purchases have matured. It peaked at around $47 billion. The reason we don't have many more left is because they've matured and markets aren't interested in providing us with any. So when we go out every week to say, okay, we'll buy a certain amount, they're not being offered because the market is working extremely well. And that's why, as Governor Macklem said earlier, we've been able to scale back some of these programs, including the Bankers Acceptance Program, as market conditions have improved.
And what about the commercial paper purchase program?
The commercial paper purchase program, it's $1.7 billion right now. It peaked at 3.6. Again, same story.
Right.
Very important at the beginning, but if you look at spreads, market activity, it's improved quite a lot.
Okay. Well, thank you for that update. Now, I want to talk or ask the Governor to comment a little more broadly on the issue of household debt, which the Governor has commented on already during this hearing, but the bank did issue a report in May that raised serious concerns about household debt being likely to rise. It was noted in that report that the number of vulnerable households, those with putting more than 40% of their income towards paying off debt, is likely to rise due to the economic circumstances arising from the pandemic. It's been about a month since that report. Would you care to comment on that serious issue, especially at a time when we see that the household debt ratio has reached 176.9% according to Statistics Canada, which is close to an all-time high?
I can say give you a bit of an update. Debt is a stock, and so it doesn't usually change really rapidly. But I think we see two things in the last month that are affecting this. So on the one hand, as I indicated, thanks in large part to the government's fiscal programs, and particularly the transfers to households, they have replaced the income lost from COVID-19, and people are buying less. So we've actually seen some increase in the savings rate, and some households are using that to pay down their debt. And we're seeing the rate of growth of household credit has come off. On the other hand, the denominator in that ratio, household debt over disposable income, of course, the denominator is falling because people are losing their jobs and their incomes, their disposable income may be going down. So again, the government is replacing much of that. So hopefully disposable income will be going down much less than GDP, put it that way. So there are these two things going on, and we'll have to see how they evolve going forward.
Right. Thank you.
Mr. Cooper, we'll give you time for a quick one if you have one.
That's okay.
Okay. Thank you. Then turning to Ms. Sirowitz and on to Ms. May.
Okay, thank you so much. I just also want to lend my congratulations, Governor Macklem. Thank you for taking on this important role, and thank you for your important service to our country at this time. I have two questions for you. Mr. Cooper had started talking to you about, or asking some specific questions around the new program to support provincial funding markets, and Ms. Wilkins gave a wonderful reply to it. My question to you is there any worry from you that it's the first time the bank has ever offered this program? Is there any worry from you that a big take-up from the provinces would actually have any type of an impact on Canada's overall GDP to debt ratio?
Well, let me just say a few words about the design of this program, because I think it speaks to how you manage risks. So, first of all, this program. Oh, sorry, the lights just went out here.
I hope it wasn't my question.
Anyways, I can still see you. There we are. Okay. Oh, blinding. Sorry. I need to wave my hands more. I think that's the problem. Not enough movement here. There's nobody in the building. We need more people in the building. Sorry. So, an important feature of the design of the program is that our purchase program is designed to be relatively neutral across the provinces, and the purchases are aligned to reflect both the size of the province and the historical pace of issuance of the province. And so that creates a reference portfolio. What we purchase won't be exactly on the reference portfolio because it depends what's available, but it should be pretty close. And so the idea is it's not targeting any one province. It's not trying to help one province more than the other. It's really designed to ensure liquid funding markets and ensure that provinces have access to markets and can borrow. The other element of that program is that, like the corporate bond program that Senior Deputy Wilkins just talked about, by reducing the spreads relative to the Government of Canada curve, that improves the transmission and effectiveness of monetary policy.
Okay, perfect. I have one more question. So Canada, as we know, is a huge country, small population, relatively small economy. And so we very much rely on external markets as well to be successful from an economic perspective. What are you keeping an eye on internationally, globally, with other G7 countries that you're kind of worried or monitoring that might have an impact on Canada, either in a positive or a negative way?
Well, thank you for that question, and it is worth highlighting that trade is a big part of our economy. As you highlighted, we're a relatively small economy, and in order for us to compete effectively globally, it makes sense for us to achieve critical mass in some areas and import goods in other areas. There's no question global supply chains have been severely disrupted by this crisis, and companies are rethinking their supply chains. They're looking to shorten their supply chains. They're looking to improve the resilience in their supply chains. So that's going to affect trade. More broadly, for a number of years now, we have seen increasing trade tensions. Canada has been managing that reasonably well. We do have the benefit of a number. Canada actually is almost unique in the sense it's got a trade agreement with Europe. It's got one with the United States. It's part of the new TPP. Nonetheless, there is a risk in this crisis that countries look increasingly inward and protectionism increases, and that is certainly a concern. It's going to be important for Canada to have a voice at the international table, but the reality is we're probably going to have to be a little more reliant on internal growth, at least for a time, than we have been in the past. And that's going to be one of those structural features we're going to need to make sure we understand at the Bank of Canada.
Okay, thank you. Thank you, Julie. Miss May, are you back on?
Yes, I'm here.
We'll give you a question and a supplementary. Elizabeth, go ahead.
Oh, Wayne, you're so generous today. First of all, to Governor Macklem, I add my congratulations and welcome to a critical role at this critical time. This is a little different than the direction some of my colleagues have taken, but I wanted to ask you about modern monetary theory and how you see this affecting us as we're coming out of pandemic. Modern monetary theory seems to imply that sovereign issuers like Canada need not have too much fear about large deficit as long as the debt is held within the country. I'm wondering on how you think this might affect the position of large international borrowers like many of the developing countries, and whether we might anticipate some sort of debt forgiveness, such as the Jubilee year suggestions of some years back, as COVID crisis will really impact the poorer nations far more in their ability or inability to repay foreign lenders.
Governor?
Okay, well, there's a few things in there. Let me try to take them in turn. With respect to modern monetary theory, I'm sorry if I'm going to disappoint you, but I'm not a big fan.
Not a big fan, okay.
Our actions, our extraordinary actions are very much anchored in our inflation target. They are anchored in providing the monetary stimulus that is needed, providing the market funding in the face of a liquidity crisis to support the economy and close the output gap and get the economy back and keep inflation on target. The difficulty with modern monetary theory is that it has all sorts of objectives. While they may be worthwhile objectives, monetary policy is not the way to achieve them. With respect to issues of debt forgiveness, I will highlight that we are incredibly privileged in this country. We are a very rich country. And as difficult as this is, it's way more difficult for many emerging market countries. They have nowhere near the capacity to provide the kind of stimulus that we are able to put in place to support Canadians. Their health systems cannot cope with this crisis. So, these are really decisions for the government and governments globally. But I think one of the issues going forward is going to be how does the world support countries that don't have the resources to deal with this. And the IMF is certainly putting in place new programs, the World Bank, and we participate in those forums. But it is a big issue.
If I get my supplemental, since you've raised the issue of the World Bank and the IMF, I'm attracted to the notion that post-pandemic we can actually ask some big questions. As you said, this is unprecedented as an economic hit in certainly not just our lifetimes, but a while back. I'm wondering if you think there's any attraction among other central banks and policymakers around the world that we should really think in terms of something on the scale of a new Bretton Woods, to sit down and say, is the IMF, which was obviously originally established to set currency rates and doesn't do that anymore, do we want to look at the role of the World Bank, the IMF, the larger questions of how we structure our arrangements in a global economy in order to better meet the need for stimulus to get economies back up and staying stable post-pandemic?
Well, I will say that this pandemic has underlined once again that many of our biggest global challenges, our biggest challenges, are global. Whether it's climate change, whether it's a global pandemic, whether it's global financial stability that we had to confront 12 years ago, we cannot solve these problems one country at a time. And I worry that the lesson, that you're seeing I worry that the lesson some people are taking from this is we need to, close our borders and look inward. I think actually the lesson is the opposite. We cannot solve these problems on our own. We are going to have to find mechanisms to work together more effectively, more cooperatively, globally. And for Canada, that's particularly important. We're not a big country, as others have underlined, and the global rule-based system has served Canada very well.
Thank you very much for your time.
Thank you. Thank you both. Just coming off that question, I have a couple myself, and that is, during these times, Governor, Senior Deputy Governor, what is happening globally between the central banks? I mean, you are absolutely right. This is a global pandemic that affects the economy of all countries globally, and certainly the health of people globally. So, what's your strategy in terms of central banks globally? Is there discussions? How do you work?
Well, I'm 2 weeks into this job, so I haven't had a huge number of discussions with other central banks. So I'm going to ask Senior Deputy Governor Wilkins to say a few more words about that. But I will say that, as somebody who spent a long time in the international central banking community in the past, it is a very valuable community, and there is a certain professional affiliation, common bond among central bank governors and senior central bank officials, and a long tradition of working together. And we certainly are. Many of us are embarked on unprecedented policies, and there is a fair amount of comparing notes. But I'll let the senior deputy say a few words about this, because she's actually been involved in these a number of these meetings leading up to where we are today.
Go ahead, Ms. Wilkins.
It is extremely valuable, Governor. He's absolutely right. And we've spent a considerable amount of time at the beginning daily, then a couple of times a week, weekly, in a number of forums, central banks collaborating on the actions that we thought would be appropriate. We weren't coordinating timing or divulging information necessarily, but certainly sharing notes on different programs, that some of which we have put in place. And one of the most visible would have been, for some countries, the US dollar swap lines, which we do have in place, but we've not needed to use, although other countries like Europe, areas like Europe or Japan have. We've also been working with the Financial Stability Board on financial stability issues, particularly right now, those that are arising in some emerging markets, Latin America, Brazil being some specific examples, with some close monitoring there. It's interesting. It feels like central bank digital currency, digitalization have nothing to do with COVID, but in fact, they've put those issues front and center. And so the Bank of Canada is collaborating with a group of central banks on our work on central bank digital currency. And within the G7, just as another example, we've been collaborating on digitalization. And if this is going to be accelerated, and we know that our statistics are not up to the task of measuring the economy at this time, then what can we do to help promote a better universal measurement that all countries can use and benefit from as they design their policies?
Okay, thank you very much. We'd better end with that. I guess we have estimates next, and I think there's 3 departments with 12 witnesses that I know the clerk will want to test to give them time to, so we can actually talk to them and translators can translate. Look, on behalf of the governor, senior deputy governor, and behalf of the committee, I want to thank you very much for coming to the Finance Committee to answer our questions. Not always easy when you're only in the job a few weeks, Governor, but we certainly thank you, and you can also pass on our thanks, I think, as well to the staff at the Bank of Canada, the other deputy governors, and certainly your board. For the work you do. You're a major instrument in the stability of our financial system. So we thank you for appearing and thank you for answering our questions. All the best. We will.
And yeah, thank you for that, Chair. And I will be sure to pass that on. It will be appreciated.
Then with that, committee members, we will suspend for about 5-7 minutes and come back to deal with the estimates. Meeting suspended. To you folks, okay. I believe, looking here, we have most of the members back, so we'll recall the meeting to order, and in the next hour, we'll be meeting on the main estimates 2020-21 votes 1 and 5 under the Canada Revenue Agency, votes 1 and 5 under the Department of Finance. Votes 1 under the Financial Transaction and Reports Analysis Centre of Canada, and vote 1 under the Office of the Superintendent of Financial Institutions. So we have with us a number of representatives from the Department of Finance, from the Office of the Superintendent of Financial Institutions, and from the Financial Transactions Report Analysis Centre of Canada. Now, I don't know if there is opening remarks. We never clarified that. If there is, then somebody wave their hand. Okay, Miss Bass, your name comes up fairly small here. On my end, go ahead. We'll let you folks make your presentation first, then we'll go to questions. And just for the information of committee members, first questions will be by Mr. Cumming, Ms. Zerowitz, Mr. St. Marie, and Mr. Julian. So Ms. Bess, go ahead.
Monsieur le Président, membres du comité, bonsoir.
Good evening, Mr. Chair, members of the committee. Thank you for the opportunity to present for the main estimates of 2021 fiscal years on behalf of the Department of Finance. Joining me today are departmental officials who are here to assist in providing you with more in-depth perspective on the rationale and policies that support the numbers within the estimates.
The Department of Finance develops policies and provides advice to the government with the goal of creating a healthy economy for all Canadians. In 2020-2021, the Department of Finance will continue to support the Minister of Finance and the Minister of Middle Class Prosperity and Associate Minister of Finance in delivering on a responsible fiscal plan that will continue to invest in people and in things that give people a better quality of life while continuing to build confidence in Canada's economy. The 2020-21 main estimates reflect departmental budgetary spending of $99.5 billion and non-budgetary spending of $50.2 million, which is composed of $105.5 million of voted budgetary expenditures, $99.4 billion in statutory budgetary expenditures, and $50.2 million in statutory non-budgetary expenditures. In comparison to the 2019-20 main estimates, these main estimates reflect a net increase of $4.7 million in voted budgetary expenditures, mainly due to increased activity for analytical capacity building within the department to manage the government's assets, including Trans Mountain Corporation entities, as well as an increase in payments due to collective bargaining. Statutory expenditures are not included in the appropriation bill as they have already been approved by Parliament through enabling legislation. However, they are included for information in the estimates documents. The statutory budgetary expenditures in the main estimates reflect a net increase of $500 million in statutory budgetary expenditures, which is mainly due to increases in major transfers to other levels of the government. This net increase is offset by decreases in interest on unmatured debt and other interest costs. The statutory non-budgetary expenditures included in these main estimates reflect Canada's fourth of 5 equal installment payments to the Asian Infrastructure Investment Bank. Mr. Chair, this concludes my high-level overview of the main estimates for the Department of Finance. My colleagues and I would be pleased to answer any questions the committee members may have. Thank you.
Thank you very much, Ms. Bess, Chief Financial Officer of the Department of Finance. So we'll turn to questions then, and we'll start with you, Mr. Cumming. If I get my paperwork sorted out, know who's who. Mr. Cumming, you're on. It'll be about 6 minutes.
Great. Thank you, Mr. Chair, and thank you to all the officials that are here today and the work that you do to put in these, to create these estimates. In fact, I think I complimented all of you when the minister was here to say a very talented crew. So given that we've got this very talented crew, can you describe for me as a new parliamentarian, how difficult would it be, given the work that's been put into these estimates, to produce either a budget or a budget update, given the work that you've put into these estimates?
Thank you, Mr. Chair. I think I'll let my colleague Brad Recker comment on that. I think he'd be able to provide some more information on that front.
Did we get Mr. Recker back?
Hello, I've been having some trouble with my audio setup. I'm sorry that I missed the question. Would you mind repeating it, sir?
Sure. My question was, given the work that's been put into these estimates, how difficult would it be for the department to produce either a budget or a financial update so that we had a better understanding of the bigger picture of what's going
on? Both a budget and an update are pretty significant amounts of effort for the department. It is something, however, that we are able to do and is core to our mandate in general. So yeah, that's pretty much what I had.
Okay, so in addition to these estimates, the main budget and the supplementary estimates, so you believe that you'd be in a position that you could create a budget and or a financial update?
The department can and does produce both budget and fiscal updates annually, yes.
So we've had, for the last 100 years of Parliament, we've always had one each fiscal year. So is it something that you're currently working on?
The department continually monitors the fiscal situation as it evolves. We're in constant contact with private sector forecasters, with think tanks, etc. We're always working to monitor the situation for sure. In the current environment, there's a very high degree of uncertainty. This is evident in any of the outlooks that have been put out by international agencies and others. So to that extent, putting out any sort of detailed fiscal outlook over a longer horizon would be a significantly difficult endeavor at this point, for sure.
But we have seen other governments do it, and we have actually seen provinces now do it. So it strikes me that it is something that could be done.
Sure. There have been several provinces have gone ahead and produced budgets or near-term outlooks, but we have not got a date for an outlook for ourselves at this time.
So within the main estimates, this is probably still for finance, I tried to find a breakdown for the infrastructure programs, and it's spread out through a variety of departments. Is it not possible within that budget, when there's an infrastructure budget set, to be able to have clarity as to where those expenditures went and actually be able to find the projects that they were actually allocated to?
Is it Mr. Recker or who taking this? Mr. Recker, go ahead.
I'm not the expert on the infrastructure profiles. I would turn that over to my colleague in EDCF, I believe.
Sure, I can. Yeah, thank you. I can offer a bit of background on this. So I think, as the member would know, there's a large number now of federal infrastructure programs, both legacy, first mandate of this government, and more recent announcements by the government. Overall, the responsibility for integrated reporting on the infrastructure plan, it is with the Infrastructure and Communities Minister, that's Minister McKenna, and my colleagues at INFC are really the ones that are wrestling the data and integrating the data.
Point d'ordre, Monsieur le Président.
Yes, Mr. Lemaire.
Ça fait quelques interventions dans lesquelles les interprètes nous mentionnent que l'interprétation est difficile, soit que le micro est trop proche ou trop loin des différents témoins, et ça suspend l'interprétation.
Okay, I'm not getting your translation either, Mr. Lemaire, but Ms. Tansey is going to tell you your mic maybe needs to be pulled away from your mouth a little bit as well. Go ahead, Ms. Tansey.
Je m'excuse.
Sorry about that.
Go ahead.
What I was saying is Infrastructure Canada is best placed to bring together and integrate the data on the federal infrastructure programs. They do release reports on their website, but it is continually an area of improvement that we're working on across the relevant departments involved in infrastructure spending. So while not part of the Department of Finance's main estimates, we are collaborating with our INFC colleagues to improve disclosure around the infrastructure plan.
Mr. Cumming?
Well, it certainly needs some improvement, because we can't seem to find out which projects that the money was allocated to. So I want to move to FinTrack. The main estimates state that Canada will be paying over $20 million for compliance with anti-money laundering and anti-terrorist financing legislation and regulations. Can you give us an update on that money? What are the KPIs around that money, and what's the expected return or the expected results of that level of funding?
Great. Thank you very much for the question. In terms of our compliance efforts, most recently, we have received funding to ensure compliance, particularly with regard to the casino sector and the real estate sector, and particularly in British Columbia. I don't think I need to remind people hear of the Cullen Commission. There's been a lot of attention paid to real estate and casinos in BC, and we've been doubling down our efforts to ensure compliance in those sectors. At the same time, we are continuing to ensure compliance with the money services business, banks, and other reporting entities. In terms of performance, I'll say it's an uneven playing field for compliance. Large financial institutions generally are quite compliant. Real estate agents, money services businesses, we invest a fair bit in terms of outreach, guidance, training, to ensure they're aware of their obligations, but also to conduct examinations to ensure that they are abiding by their obligations.
Mr. Cumming, we lost a little time there, so go ahead, ask another question.
Okay. So how do we determine whether we're getting value for the money? I didn't hear anything in your answer that would indicate how you will measure whether you've been successful or not. Can you give us some indication of how that would be determined?
Absolutely. So when we go and conduct an examination in a sector, for example, we maintain statistics as to how the specific reporting entity is complying, but how the sector generally complies. Our expectation is over time that compliance would increase, non-compliance would decrease, and that has a direct effect on the quality of the information that we receive. So it's generally tracked through level of compliance in the reporting sectors that have obligations.
Okay, turning then to Ms. Zurowitz, followed by Mr. St. Marie. Julie?
Great, thank you so much. Thanks to everyone for being here today. And thank you for all your tremendous work. My first question is directed, or my first questions are directed to the Canada Revenue Agency.
That's not on, they're not on yet, Julie, they're the next hour.
Okay, well then I will not be directing any questions to them right now. I will then be directing my questions to the Office of the Superintendent of Financial Institutions then. Thank you, Mr. Chair, for correcting me. So to OSFI, in the 2020-2021 main estimates, OSFI has requested a funding of $1.2 million for program expenditures under Vote 1, a net increase of $35.6 million or 12.8% from the funding requested in the 2019-2020 main estimates. What are the major factors that are contributing to the increase in the amount requested under Vote 1?
OSFI.
Hello, thanks for your question. This is Marc Deshotel, CFO. That amount pertains mainly to actuarial advisory services provided by the Office of the Chief Actuary, which is an independent section within the broader group. So there's been an increase in staffing there. So it's mainly related to salaries. There was a bit of a catch up in regards to staffing vacant positions. And there was also an increase in salaries as a result of the most recent collective agreement.
Okay, thank you for that. And then just also to OSFI, there's also been a request of $199.8 million for statutory expenditures, which is a 21.6% increase from the funding requested in 2019-2020. What were the major factors contributing to that increase?
Yeah, that's a good question. What happened in 1920, you would have seen the main estimates at a lower level than what you're seeing for the upcoming fiscal year. And post submission of the main estimates last year, we put forward a new strategic plan to ensure that we built the OSFI of tomorrow, that it remained at the forefront of an increasingly complex financial sector. So we put forward a strategic plan post submission of the main estimates. So there was a large set of initiatives that supported that strategic plan. whether it was on the non-financial risk side of things or whether it was building our technology infrastructure to better support frontline supervisors. So like I said, post submission of the main estimates last year, we did revise our strategic plan, revised our financial envelope, and that has led to the increase that you see there. If you look at our spending for the past fiscal year 19-20, it would have been reasonably in line with the revised budget that we prepared post the main estimates.
Okay, thank you for that. And if maybe I could shift my questions over to the Department of Finance. With respect to the COVID-19 pandemic, to what extent have any additional costs been borne by the Department of Finance been accounted for in the 2020-2021 estimates? And does the department anticipate significantly greater operational costs as a result of the pandemic?
Who wants to take that? Ms. Bess?
I'll start.
Okay.
I'll start. Yeah, Darlene Bess, the CFO, Department of Finance. So I'll say the main estimates primarily right now don't really incorporate the COVID-19 response. I would say our supplementary estimates incorporate some of those costs right now. We're still looking as a department to understand what the implications will be from a staffing point of view to deal with some of the pressures that we have as a department in responding to COVID-19. So I think that's, sorry, I just realized I didn't have my mic. I hope you could hear. So the main estimates really don't incorporate much of the COVID-19 costs, more the supplementary estimates, and we're still assessing things as we go.
Okay. Does anyone else have anything else to add, or okay? I'm trying to think if I have any other questions. I have one for
We know you got some for CRA, but
I have many for them. Can I tell you?
You can hold for them, Julie, and we can move along unless you get an urgent
Well,
one.
I'll ask quickly to FinTrack then. I think it's maybe a similar question with respect to COVID-19. To what extent have there been any additional costs borne by FinTrack as accounted for in the 2020-2021 estimates?
Mr. Wallace or who?
I'll take this one.
Go ahead.
Actually, very similar to the response that Ms. Bess had provided. You won't see any of the expenditures by FinTrack represented in the main estimates for 2021, but rather similar to what was articulated. You'd be maybe seeing some of that coming through supplementary estimates further in the supply cycle.
Perfect. Thank you.
Okay, thank you. Then we'll turn now to Mr. St. Marie, followed by Mr. Julian. Gabriel?
Oui, merci, Monsieur le Président.
Thank you very much, Chair. I want to acknowledge all the officials that are here to answer to our questions, and it's very much appreciated. My questions will be to the Department of Finance, and the first question will deal with high-speed internet expenditures. We're in 2020, and given the pandemic, people are confined to homes, sheltering in place, and access to good quality internet service it's an utility, it's an essential service, particularly in isolated communities, rural areas, indigenous communities have adequate access. In the documents, we talk about contributions. So I have a technical question, first of all. If we take a look at the investments forecast in 2018-19, get connected, it seems that all of these were postponed to further time. Why, is my question.
Bess, or it may be
try.
Not related to the estimates, more on the political side, but go ahead, Ms. Bess.
I was going to say that there's nothing really in the main estimates that really talks about high-speed internet involving our department in particular. Probably something that would be part of ISET Innovation Service Development Canada, or one of the other departments. And I don't know if any of my colleagues have any comments on that based on the work that we do with any of those departments on high-speed internet. But there's nothing in the main estimates that really talks about that we have in particular for high-speed internet.
Just to not take time away from you, Gabriel, one of the difficulties is that we are dealing with the estimates for the specific department itself. And I know a lot of the questions would relate to more the budget as a whole, in which we could ask questions on those areas. So go ahead, Gabriel.
Bon. Très bien, c'est entendu, merci.
Okay, understood, Mr. Chair. Thank you. The Parliamentary Budget Officer has just reported back on some of the supplementary. Now I'll quote. They will put out credits of $1 billion for the COVID-19. It will be very difficult for parliamentarians to exercise their essential role of supervising and commenting on a government's expenditures. They won't have the opportunity to ask questions of witnesses, particularly officials who are the best informed to answer the questions. They will not have the opportunity to fulfill the essential role of criticizing and perhaps rejecting certain appropriation requests as the opposition may have a totality or majority of the seats in Parliament. So they will not be able to either accept or reject it in whole or in part. Is this, would you share that interpretation of the situation, the Parliamentary Budget Officer's point of view? Thank you.
And I'm not sure if anybody can answer that one either, but go ahead, give it a stab, Ms. Best, or who else was coming in there? Ms. Best, I guess go to you.
Well, I would say that the COVID-19 benefits or anything that's related to COVID-19, as my colleague Christopher Bayou had mentioned as well, all are included in the supplementary estimates A, and we're here to discuss the main estimates, which don't have the COVID-19 package. So I don't really have anything to say in terms of the amount of time that's been allocated. That's not really at my discretion. So yeah. Sorry, my apologies for that.
We understand, puts you in a difficult position. And just for committee members again, Gabriel, and I'll not take this time away from you, but we really have as parliamentarians until November 2020 to study the estimates and supplementals. So hopefully we can find the time to get into some of those more dicey questions a little later. I'll give you the time back and go ahead, Mr. St. Marie.
Oui, merci.
Thank you, Chair, once again for this clarification. We will have to come back on it. We're granting billions of dollars. Of course, the pandemic has changed the rules because of social distancing, it's isolation, etc. But we have to take the time to actually fulfill our mandate and our responsibilities. But the PBO, while the supplementary budget contains a significant part of the expenses engaged by the government, the totality of these expenses is not there. We have details relating to the authorizations given to organizations which will be using some of the Treasury money. We do not have a full picture of the expenses and the final cost of what COVID will cost us. Among these, and we're not talking about small, the emergency wage support, the bailout for businesses support, and others for employment insurance operations. Now, I understood what you said earlier, Chair, but I would like to ask to all the officials at present, and on behalf of parliamentarians and the public, it's very, very important to get a full picture of the expenditures that have been engaged or committed. we have to pay for all this eventually. Mr. Cummings had mentioned it in his presentation. In my opinion, the Department of Finance could probably give us an update as soon as possible. I believe they have the statistics in hand or can obtain them, and we would have sufficient detail because we don't have time right now to get just bits and pieces of answers and analyze thoroughly the situation. So I'm suggesting to all the witnesses, all the officials here, that they do their best and get us the information. Thank you, sir.
Who wants to take a stab at that one? Ms. Bess again? Or...
Okay, thank you for the question. I'm just wondering if you could clarify what it was exactly that you needed in terms of statistics and details.
Mr. Gabriel, Mr.
Oui,
St. Marie.
Merci.
Yes, thank you. Well, in the document that we're going to be voting on tomorrow, the PBO has pointed out that we do not have the wage support program cost, and in other chapters or parts of the emergency response cost, including employment insurance, work-throughs, top-offs, and all of these details should be presented by way of a interim report, a status report. The measures are provided spontaneously, ad lib, and we don't have anything backing them up. So we'd like to see on the basis that you're working on in order to achieve an economic restart. We need the information.
I don't go ahead, Ms. Bess, but I would say I think Mr. St. Marie's point has been made. We do have the biweekly report on the COVID-19 pandemic that we get at committee that includes some of those. We have the estimates. We don't have the supplementary estimates as yet, but I think Mr. St. Marie's key point is we really don't have a budget of which parliamentarians can delve into and ask the broader questions that need to be asked. I just make that point. I don't know if anybody from finance or other officials there wants to give a response. If not, we'll turn to Mr. Julian. Peter, you'll be followed by Mr. Morantz will follow Mr. Julian. Peter?
Thanks very much, Mr. Chair. I should note that the Conservative motion from a few weeks ago that was not voted on in Parliament would have given us only 3.5 hours for a discussion of the estimates tomorrow night. So we actually have more because of the NDP motion than we would have had from the Conservative motion. I think that's an important note to make. Thank you very much for our witnesses for being here. We deeply appreciate your availability, and we hope that your families are safe and healthy. I have 2 questions to start for the Ministry of Finance. First off, are there any projections in terms of corporate loan write-offs for this year? In 2018, the federal government wrote off about $2.6 billion in corporate loans. Earlier this year, 2019, 2020, $196 million. We still don't know which company received that benefit. So that's one of my 2 first questions. And the second is the amount, the line item in the main estimates around managing government assets, including the Trans Mountain Pipeline. We are losing $150 million a year with Trans Mountain. Is there a projection within the Ministry of Finance for the construction costs? Currently, has it been updated? Because the last one we got from the company, of course, is way out of date, and the costs have skyrocketed since. And has the Ministry of Finance done an estimate of the cancellation costs? If we canceled the project right now, how much would Canadians save? Those are my questions to start. Thanks for being here.
And that's just to start. Who's taking it? Ms. Bess, go ahead.
I think I'll refer to my colleague in EDCF to see if she can provide some more information. Ms. Dancy, please. Thanks.
Ms. Dancy, go ahead.
Sure. On the first part of the question, in respect of corporate loan write-offs, the Department of Finance does not extend loans directly to companies, to my awareness, so that information wouldn't be reflected in our individual departmental reporting. My understanding is, for example, the financial crown corporations or the departments that extend repayable contributions, they're all reporting on a departmental or organization based basis what their provisioning is and any write-downs of the assets for which they're responsible. So I don't have that kind of estimate to offer. In respect of the TMC entities, I know this committee had a meeting last Thursday where Mike Carter from the Canada Development Investment Corporation was present, and he received a very similar question. I can reiterate his response, which continues to be the timely response, which is the public cost estimate most recently provided by Trans Mountain Corporation, which is a subsidiary of CDEV, where Mike Carter is Executive Vice President. It continues to hold as our best estimate right now of the construction costs. At this point, TMC is spending on construction, but that is actually an investment activity. And so overall, the entity is not experiencing a loss. It is making investments, however, that are using up cash from that perspective. And these estimates are disclosed through the TMC reporting as a federal crown corporation, as well as subsumed in the parents reporting, that's CDEV's reporting. Thanks.
Thank you very much. Well, after interest charges, Canadians are losing about $155 million a year on TMX. And as I mentioned earlier, Mr. Chair, the costs are skyrocketing. It's the biggest boondoggle in Canadian history. But I'll move on to another item, and that is for FINTRAC. Thank you for being available today. For FINTRAC, as you're aware, there is a lot of debate, discussion, and the implementation of a beneficial ownership registry is fundamental. I would love an update on where that is and where FINTRAC may be as well on the issue of public accessibility to a beneficial ownership registry.
I'm happy to take that on with the Department of Finance.
Ms. Anderson, go ahead.
You can kick that off. So very important issue. Thank you for raising it. We did extensive consultations early in the year and actually just were able to begin them and finish them just prior to the onset of the pandemic. So we did do broad-based consultations across Canada, including with the provinces, on beneficial ownership. We released a consultation paper. So we're taking the results of those consultations to assess an appropriate way forward on beneficial ownership and what policies may be required.
Do you have a timeline for implementation?
Not at this time. Timelines have shifted given the urgent priorities of COVID-19, but okay. it does remain very much a priority given the issues involved.
Thank you very much. Yes, to OSFI, thank you very much for providing us with the update on the overall supports to the banking sector. We got this a couple of weeks ago, $750 billion, $750 billion going to Canada's big banks. It received $5 billion in profits so far during this pandemic, while people are literally fighting to put food on the table. Is there an update that OSFI has on the overall figures? The Bank of Canada gave us a support level just earlier today at $341 billion, which is $41 billion more than what was projected in the OSFI figures from a couple weeks ago. Do you have an update to give us about the overall supports for Canada's big banks right now?
Mr. Desautel, or who?
It's actually Ms. Cameron. I'll take
Ms.
this
Cameron,
question.
Go ahead. Great.
So OSFI does not have an update on the overall supports at this time. What I can say is that OSFI announced in early March the release of $300 billion in lending capacity for Canada's largest banks when we reduced the domestic stability buffer, and no further change to that buffer has been made since then.
Okay, we'll end that round there. We'll go to Mr. Morantz, followed by Ms. Kotrakis. Marty?
Thank you, Mr. Chair. I have to say, as a new MP, it is, I agree with Mr. St.
You're not coming through very clear there, Marty. Bring your mic down. There you go.
I have to say, as a new MP, I do agree with Mr. St. Marie's comments. It's difficult to put these estimates into proper context without a budgetary plan. But I'll do the best I can. I did want to ask, back in 2018, the Department of Finance put out a backgrounder called Ensuring Transparency. And in it, it says that the Government of Canada will not keep any direct proceeds from carbon pollution pricing. In the CRA departmental plan, I know they'll be here in about an hour, so we'll have a chance to ask them this as well. They say that there's basically a $3.7 billion transfer to CRA. Of that, roughly $3.4 billion is to fund the climate action incentive, which they say returns the majority of the direct proceeds from the fuel charge. So I'm wondering if someone could explain to me why one government department is saying that all of the direct proceeds are returned to Canadians, and another department is saying a majority of the direct proceeds are being returned to Canadians.
Andrew Marsland, go ahead.
Yes, thank you for the question, and perhaps I'll start, and Ms. Dancy may want to supplement my answer. But the vast majority of the proceeds from the federal carbon charge are returned under the climate action incentive payment through the CRA and paid when individuals in the particular provinces file their tax return. The payment is made at that time. That represents, I believe, roughly about 90% of the direct proceeds from the carbon, the fuel charge. The balance is returned to support particular sectors such as SMEs and other essentially public institutions and so on in the provinces through funding programs. And perhaps I'll let Ms. Dancy describe those programs to you.
Sure.
Ms. Dancy?
Sure. I was going to say exactly what my colleague Andrew did, in that a portion of the proceeds have been identified for federal programming that has just been named for the MUSH sector and for SMEs.
So this Ensuring Transparency backgrounder does say, though, that the Government of Canada will return those proceeds directly to the governments of those jurisdictions that choose to adopt the federal system. So I guess that 10% is care being taken to make sure that it is actually going back to the provinces and territories from which it came. That's one question. I have a follow-up, though.
Who wants to take that? Go ahead, Andrew.
Perhaps I can. So it is the case that we calculate the amounts by province. So in those provinces that choose to adopt the federal climate action system, those proceeds are returned to the government of that province. So we do account for them, and then in the other provinces, they're returned, as I say, the vast majority through the climate action incentive payment, and roughly around 10% in various programs to support small business and the MUSH sector.
And this Ensuring Transparency backgrounder from 2018, it goes on to say that the Government of Canada will provide an update each year on exactly how those proceeds were used. Do you know if such an update this was from 2018, has such an update ever been provided?
The update has not yet been provided. I think the announcement was in 2018. The first year was 2019, and we'd expect that an update will be provided in the coming months when the accounting is complete.
Okay, we'll look forward to that. Someone on the panel was talking about the difficulties in preparing an economic forecast. I have a question for that person. I don't recall the name, I apologize. Was a fellow. My question is it?
It's Mr. Recker, go ahead.
Yeah, just to follow up on some of the questions of my colleague, I'm just curious, have you prepared an internal economic outlook?
Our department continually monitors the situation. We have not prepared any sort of official economic outlook to the state.
Is there an internal one though, an unofficial one?
We continually monitor the situation. So we're always following the evolution of the economy.
Do you have any?
Go ahead with the supplementary, Marty, and then we'll let it go.
Is there any document you have whatsoever that you could table with the committee that would help us shed light on what the fiscal position of the country is?
We don't have anything like that at this time, no.
Okay, thank you.
That would only be the budget, Marty, so you know what to call for. We will go to Ms. Koutrakis, followed by Mr. Cooper, and we'll end with Mr. Fragiskatis. Ms. Annie.
Thank you, Mr. Chair, and thank you to all our witnesses this afternoon. I have two questions, both to the Department of Finance. So my first question, the main estimates show that there is a net increase in statutory budget expenditures, which have been offset by decreases in interest on unmatured debt and other interest costs. Given that interest rates are at all-time lows, but borrowing will go up because of dealing with the COVID-related deficit, how do you see the net impact on interest payments playing out? And how are we taking advantage of these extremely low interest rates on our overall debt costs?
Ms. Bess or who?
Thank you very much for the question. I think I'll refer to my colleague, Ms. Leah Anderson, to see if she's able to respond to that question on the declining interest rates and the impact.
Ms. Anderson.
Well, overall, declining interest rates are a good thing in terms of the debt. We have had to issue quite more debt given the COVID crisis and the response and the unprecedented amount of support measures that we've put in place. Going forward, given these expenditures and the debt incurred, we are actively looking at the debt structure and what is the best structure of that in the circumstances given interest rates and estimates. So we're actively looking at that, and we'll be advising this committee and the public on plans as that's developed.
Okay, and my second question is, the main estimates include an amount to support analytical capacity building within the department. Can you offer some detail around exactly what these analytical capacity building activities are, and how will these analytical capacity building activities support the work that is being done by the Department of Finance? Perhaps you can offer some examples if possible.
Okay, Ms. Bess.
Hi, thank you very much for the question. So most of the work is related to new and continued work on Trans Mountain entities and the divestiture of Ridley terminals that we can't address with our existing departmental resources. So we're looking at this funding to allow the department to engage Indigenous groups, engage with expert financial and legal advisors and additional staff. So it will help support the government's ongoing ownership of these assets. So that's the main part of that capacity building. And I don't know if any of my colleagues would like to elaborate on that.
I don't see anyone coming forward. Last question, Annie.
Yeah, sorry about that. So my question is to the OFC. Can you offer some detail around how the $1.2 million, I know it's not a big amount, but in program expenditures will be used to support the work of the chief actuary?
Mr. Disselthal or Ms. Cameron?
It's Mark Desatel. I'll answer that. The Office of the Chief Actuary provides, as I mentioned a little earlier, a series or a set of actuarial and valuation advisory services to various benefit and pension plans within the government. So, those services include, assessing obligations, cost, looking at the design and funding and administration of plans and programs. So hopefully that gives you a little bit of flavor as far as the types of services that it offers and the money and the funding that goes with it.
Okay, thank you. We've got about 4 minutes each for Mr. Cooper and Mr. Fragaskatis. Michael, you're on.
Thank you, Mr. Chair, and thank you to the officials. I see that the Office of Infrastructure Canada set to receive an additional $5.7 billion. I would note that the Office of Infrastructure Canada has seen total spending increase by 82.6% between 2014 and 2018-19. Would any of the officials be in a position to elaborate on what this additional funding is directed for?
Back to you, I believe, Ms. Bess, to direct it, that question somewhere.
Okay, thank you very much for the question. I were here, I guess, to study the Department of Finance main estimates, so I can't really comment on the Office of Infrastructure Canada, unfortunately. My apologies.
Yes, yeah. Well, speaking of something relating to the Department of Finance specifically, I would note that in the department's most recent 2018-29 departmental results report, that of the 39 targets provided for in that report, one of the indicators was to see that total business tax costs be lower than the G7 average. I see that the status has not been updated. Would you be able to provide an update on whether or not that target was achieved?
Thank you for the question. I don't have the data in front of me, but I believe it. I mean, there are various ways of measuring this. For example, the effective marginal tax rate on new business investment. I believe that is the case, that it's the lowest in the G7. So I think there are indications that the Canadian corporate income tax system is competitive. As you know, I think the government took steps in late 2018 to implement accelerated write-offs of capital investments, and those actually significantly reduced the effective marginal tax rate on new business investment. But if the committee would like more information, I'd be happy to provide it.
Okay, well, thank you for that. And I know the point has been raised already by several of my colleagues, but I am struggling to understand the difficulty in terms of providing a fiscal update of some sort, or preferably a budget. The PBO has provided a fiscal outlook twice in the past several months. If the PBO can do so with significantly less resources than the Department of Finance, why can't the Department of Finance?
Okay, I think that message is noted. I don't believe there's a response to it. Do you have one further quick question, Michael?
That's okay. I think my point was made.
Your point was made along with several others.
Yes.
Okay, we'll end with Mr. Peter Fragaskatis. Floor is yours.
Thank you, Chair. Thank you to the officials. In the 2019-20 main estimates, the Department of Finance requested funding in the neighborhood of just about $820,000, $819,555, for the purposes of, quote, strengthening Canada's anti-money laundering and anti-terrorist financing regime. My question is, how was the funding deployed, and what successes have resulted from this expenditure?
Who's taking it?
I think our
Go ahead, Miss Anderson.
I think our FinTrack colleague answered a similar question earlier. Bruce, did you want to take that one?
Mr. Wallace, do you want to run that question by again, Peter?
Sure, and I could have stepped out, Mr. Chair, so if it has been asked, I apologize, but the question relates to the purpose of the Strengthening Canada's Anti-Money Laundering and Anti-Terrorist Financing Regime. The Department of Finance requested in the main estimates funding for $819,555. The question is, how was the funding used, and what successes have been the result?
Mr. Wallace.
Great, thank you very much for the question. So in terms of how the resources were used, we invested in 5 areas. The first is with regard to compliance. So we conducted or continue to conduct a lot of outreach activities, education, training with the reporting entities, particularly focusing last year and this next year on real estate and casinos in British Columbia. In addition, we're also ramping up work on public-private projects. We've had success with Project Protect, which was a collaborative effort between the banking sector, FinTrack, and law enforcement to target human trafficking. And we've done the same thing with regard to Project Guardian, which targets fentanyl as well. So we're going to be investing more in these types of projects going forward. In addition, we've got 2 new disclosure recipients. So we are now disclosing financial intelligence to the the Competition Bureau, as well as Revenue Quebec. Finally, we are working with CBSA to strengthen our capacity with regards to detecting trade-based money laundering.
Thank you. Thank you very much.
And I would add, if I may, just from a Department of Finance perspective, this is Leah Anderson speaking, that we did also request funding for anti-money laundering, and it was for 2 purposes mainly. One is to support the policy capacity given this growing area of attention for the government and the need to further refine and elaborate policies and responses in this area. And secondly, to support our international memberships for anti-money laundering, for example, through the Financial Action Task Force, because those fees go up every year. Thank you.
Thank you, Ms.
Okay,
Anderson.
you got time for one quick one, Peter.
Sure, it's to OSFI. OSFI is requesting funding of $1.2 million, Mr. Chair, for program expenditures under Vote 1. This amounts to a net increase of $35.6 million, or 12.8% from the funding requested in the main estimates under that vote. The question is, what are the major factors contributing to the increase in the amount requested under Vote 1?
I will take that, Mark Desautels. So had a somewhat similar question to that a little earlier. If you look at the difference between our 1920 main estimates and the ones we presented this year, there is a notable increase. That said, post-production of the main estimates, we did come out with a revised strategic plan that had 4 key goals that were anchoring it. And that basically drove a series of initiatives to support the evolution of OSFI in several areas, whether it is our financial risk capabilities, non-financial risk capabilities, or just our technology infrastructure. Most of our funding does come from the institutions that we regulate and supervise, whether it is the banks, insurance companies, or pension plans. We do get roughly 93-94% of our funding from those sources. So that was basically the key driver behind the increase in our financial footprint, basically to support the new strategic plan which we put forth at that point in time.
Thanks very much.
Okay, thank you, and we will have to end at that. There's a lot of witnesses on here today, and you're seeing some of the difficulty of having to meet over Zoom on some of these complicated matters, and to complicate it even more, not having had an economic update or a budget. I think you can see from some of the questions from some of the members, there's a lot of areas that members on the Finance Committee would like to delve into that go beyond certainly the estimates of the Department of Finance and the other two agencies on here. In any event, I think that message has been made loud and clear that there is a desire for information on the broader-based policy approach by members of the Finance Committee, and so we'll leave it at that. You know the message that I'm sending. So with that, we thank you for appearing today, but even more so, we want to thank each and every one of you, and for that matter, your families, for the extra effort that you put in over the last several months. I know it's trying times, it's mental pressure, it's fatigue. So a very heartfelt thanks to the work that you do as we go through this difficult period in our history as a country. So with that, we will suspend for the next panel, and thank you very much. Meeting suspended. with the main estimates 2020-21 votes 1 and 5 under the Canada Revenue Agency during this session. And I'd like to welcome the witnesses here from the Canadian Revenue Agency. And I believe, Ms. Caron, you have an opening statement. We'll give the floor to you, and then we'll turn to questions. And just for the benefit of committee, the first questions will be by Mr. Morantz, Mr. Fraser, Mr. Lemur, and Mr. Jolien. Ms. Caron, floor is yours. Welcome.
Thank you, Mr. Chair. Good evening, and thank you for the opportunity to appear before the committee to present the Canada Revenue Agency's main estimates for 2020-2021 and to answer any questions that you may have on the associated funding. My understanding is that a copy of my full remarks in both official languages have been provided to the clerk. To respect the members' time and to avoid technological issues, I will be providing my remarks in one official language and will be prepared to respond in either official languages. I'm accompanied today by my colleagues Frank Vermaeten, Assistant Commissioner, Assessment, Benefit and Service Branch, Jeff Truman, Assistant Commissioner, Legislative Policy and Regulatory Affairs Branch, and Ted Gallivan, Assistant Commissioner, Compliance Programs Branch. As you are aware, the CRA is responsible for the administration of federal and certain provincial and territorial tax programs, as well as the delivery of a number of benefit programs. Each year, the agency collects hundreds of billions of dollars of tax revenues for the governments of Canada and distributes timely and accurate benefit to millions of Canadians. It should be noted that the CRA's 2021 main estimates do not reflect incremental resources required for the payment or the administrative costs in support of the Government of Canada measures to support Canadians and businesses facing hardship as a result of the global COVID-19 pandemic. These measures include, as you know, the Canada Emergency Response Benefit, the Canada Emergency Wage Subsidy, and the Canada Emergency Student Benefit, to name a few. The cost of the emergency benefit payments will be funded through statutory authorities, including those under the Department of Employment and Social Development. The funding associated with the administrative costs will be sought separately by the CRA in the coming months. Our priority is to deliver on these measures as quickly as possible. In the meantime, in order to fulfill its mandate in 2021, the CRA is seeking a total of $7.9 billion through these main estimates. Of this amount, $3.5 billion requires the approval of Parliament, whereas the remaining $4.4 billion represents forecasts for statutory authorities that are already approved under separate legislation. These statutory items include the Climate Action Incentive Payment, Children's Special Allowance Payments, Employee Benefit Plan costs, and, according to Section 60 of the CRA Act, the spending of revenues received for activities administered on behalf of the provinces and other government departments. These 2021 main estimates represent a net increase of $3.4 billion when compared to the 1920 main estimates. Almost the entire amount of this increase is related to the forecasted statutory Climate Action Incentive Payment of $3.4 billion, which returns the bulk of direct proceeds from the federal fuel charge to eligible individuals and families living in provinces that have not met the Canada-wide federal standard for reducing carbon pollution. The CRA is responsible for administering the fuel charge component of the Greenhouse Gas Pollution Pricing Act, which includes the Climate Action Incentive Payment. Excluding the statutory Climate Action Incentive Payment, the agency's 2021 main estimates represent a net increase of approximately $33 million, or 0.7% when compared to the 1920 main estimates. The largest component of this change is an increase of $69 million for collective bargaining adjustments for some 12,000 employees represented by the Professional Institute of the Public Service of Canada. Other increases to the agency's budget include $24 million adjustment to forecasted statutory payments under the Children's Special Allowance Act for eligible children in the care of agencies and foster parents. These payments are equivalent to the Canada Child Benefit paid to biological and adoptive parents. $27 million in incremental funding for measures to improve tax compliance that were announced in prior federal budgets. Thanks to the significant investment made in the recent years, the CRA has expanded its tools and capacity to target clients who attempt to conceal their assets to avoid paying their share of tax. To give you a sense of the kind of programs that are being supported by this funding, Mr. Chair, allow me to touch on some specifics. To further combat tax evasion and aggressive tax avoidance, the CRA has hired additional auditors, conducted outreach and education, built technical expertise to target non-compliance associated with cryptocurrency transactions and the digital economy. Offshore audit resources have been expanded, which directly supports the fairness and integrity of the tax system by ensuring that wealthy individuals and corporations do not circumvent their tax obligations. Improved information technology tools and systems combined with closer international cooperation allows the CRA to focus on the higher risk taxpayers. Although efforts in this domain have been affected by COVID-19, preparation for the eventual full resumption of this important work is underway. These increases are partially offset by a $40 million adjustment associated with changes in the funding profile for various measures announced in previous federal budgets, $25 million reduction in statutory contribution to employee benefit plans, and in the forecast of cost recovery revenues for initiative administered on behalf of the province's and other government departments, and a $13 million in transfers with other government departments, including in adjustments to accommodation and real property services provided by Public Services and Procurement Canada. In closing, the CRA is listening to Canadians, changing how it works, and improving services. The resources being requested through these estimates will allow the agency to continue to deliver on its mandate to Canadians by making it easier for the vast majority of taxpayers who pay their taxes. Sorry, I'm gonna cough. And more difficult for small minority who do not, by ensuring that Canadians have ready access to the information they need about their taxes and benefits. Mr. Chair, at this time, we will be pleased to respond to any questions you may have.
Thank you. Thank you very much, Ms. Caron, and thank you for the kind of in-depth remarks that that spell out where some of those expenditures have gone. Mr. Morantz, followed by Mr. Fraser. Marty, 6 minutes.
Thank you, Mr. Chair. Just a few questions. Regarding the climate action incentive, I understand the budgetary allocation essentially has gone from 4.5 billion to 7.9 billion, which is a massive increase. And so when I first saw that, I was asking why, of course, and it's clear that most of that 3.7 billion is for the refund of the climate action incentive. What I'm getting hung up on, though, is your use of the word majority in your departmental plan, or I think you call it the bulk of. My understanding, and then we just had this confirmed by finance officials a few minutes ago, is that 90% of the monies collected under that program are supposed to be returned to Canadians through the climate action incentive. Can you confirm that it is actually 90%? I'm just curious why you use the word majority.
So thank you for the question. Perhaps my colleague Jeff Truman can take the question.
Mr. Truman.
Thank you. Yes, so I can confirm the majority is returned to the provinces and those jurisdictions. And I believe, as our finance colleagues noted a little earlier this evening, that remaining portion is available to be distributed through a number of other mechanisms, some of which may return funds to businesses, for example. So that's where the remaining 10% of the allocation would go to.
Okay, so when you use the word majority, you're saying 90%. Is that right?
Mr. Truman?
Sure. So subject to a final reconciliation of those amounts, but on an ongoing operative basis, that would be the target amount, correct?
Okay, because in the Department of Finance's backgrounder entitled Ensuring Transparency in 2018, they said that they would be providing an update each year on exactly how the proceeds were used. Mr. Marsland in our last meeting said that that's never been done. Do you have any, are you responsible or your department responsible for that update?
So no, that would fall to the Department of Finance to do that reconciliation or accounting of the amounts.
Okay, and just one moment, Mr. Chair. So
Not a
many
problem.
questions, so many
It's your
questions,
time.
so many questions, so little time. So the with respect to the taxpayers ombudsman, let's turn to that for a second. This year, their allocation is $3,780,000. It was $3,471,000, which is over an 8% increase, which is a pretty big increase. I'm just wondering if you could explain what that increase is for.
Mr. Vermaten, or who?
So Jannick here, I'll take the questions. I believe that there were a few more employees funded for the taxpayer ombudsman, but I would have to come back to you with specific details in terms of the specifics. But
Okay,
it's a fairly small budget to start with. So
yeah, and just getting back to the estimate, the 7.9 billion. This was tabled before the whole COVID crisis came, and CRA is responsible for administering a large number of the emergency programs, but we didn't see any additional allocations in the supplementary estimates, and I'm just wondering why that would be.
So a number of the benefit programs that we administer are covered under the statutory authorities that are included in Supplementary Estimates A for the Employment and Social Development. So the Emergency Response Benefit, the CERB, and the Emergency Students Benefit as well come out of the statutory authority that are included in the ESDC supplementary estimates. For the emergency wage subsidy, we're still working on confirming the source of funds for that. It will come from the consolidated revenue funds.
Sure. And the $3.7 billion transfer, in your report, you say 3.4 billion is for the climate action incentive. What is the other 300 million for?
It's for the children's special allowance. So that's the equivalent to the Canada Child Benefit that are paid to foster home and children's aid societies. So that's about $361 million.
And so it's really the transfer is for those two programs solely?
So that total amount of transfer payments is indeed for these two programs.
Just for those two programs. Well, that's good to know. Well, I think that's those are my questions, Mr. Chair.
Okay, thank you, Mr. Morantz. Then turning to Mr. Fraser, followed by Mr. Lemire. Sean?
Thanks so much, and I'll build upon the line of questioning on the climate action incentive that my colleague began. I find that the numbers that are cited are meaningless to most Canadians. I don't think very many of us, including I assume some of my colleagues on this panel really know in a person's life how far $3.4 billion goes. I'm curious if you can break it down to a level that is more familiar to household finances. During the debate about putting this plan in place in the first place, we often used we being the government, often used the example of a four-person household, 2 kids, two adults. I'm curious if you have the data on what the payouts in the various provinces would look like. I am curious, are you able to break down sort of the household level data on that $3.4 billion?
So Mr. Truman is probably best positioned to answer the question.
Sure. More specifically, Mr. Truman, if there's two things, if you could perhaps pick two provinces to illustrate, I think maybe Ontario and Alberta, just for the sake of illustrative purposes, what would a household look like? And the key question that I'm trying to hone in on is the payment to households in fact greater than the cost to households of this climate action incentive as compared to the cost of the fuel charge?
Yes, thanks for that. And so, yes, the general working assumption is that the payment to the household, and we use sort of the typical family of 4 in most of our examples, would be greater than the cost of the fuel charge to them. So the way it's structured in each of the jurisdictions, There's a base amount that applies to the first individual in a household. There's a secondary amount that is for a spouse or common law partner, or in the case of a single parent, it would apply with respect to the first child. And there's a child amount, thirdly, that is simply multiplied by the number of children in a household. So if you look at that family of 4 in Ontario, for example, the basic amount is $154. The secondary amount is $77, and the per child amount is $38. So doing the math very quickly in my head for a family with 2 adults and 2 children, you're looking at $150. You're looking at a little over $300 for that family of 4 in Ontario. And then just to give you a bit of a, did you want the numbers for Saskatchewan?
Yeah, sure. I think a different province. I think there's certain provinces that have higher emissions intensities, and I think it would be helpful because we're not using this to transfer money between provinces to illustrate the impact in another province as well.
Exactly, and Saskatchewan is an example of a province with a higher intensity of emissions, and so you'll see that the amounts in Saskatchewan are larger. So the base amount in Saskatchewan for that first individual, $305. For the second person in the household, $152, and then $76 for each additional child. So again, the family of 4, that'll put it at a little over $600 for the Saskatchewan family of 4.
And as a general rule, in each of the provinces where the family of 4 example is being used, you would be confident to say most households would in fact be better off in each of the provinces that the federal program applies.
That is correct.
Changing tack for a moment, I expect it'll be Mr. Gallivan who answers this question, but I'm not certain. During your last appearance before the committee, you made very clear that the enforcement around the CERB, and I appreciate the estimates don't touch on the COVID measures necessarily, but you made very clear that the punitive measures for fraudsters would be reserved for egregious examples. You cited criminal organizations pushing 300-400 CERB claims in other people's names. A question came out in the House of Commons from one of my colleagues, Mr. Blakey with the NDP today, about one of his constituents he was concerned about who would have to be taking time away from work to take care of a loved one, I believe was the scenario he raised. And he was asking, are they going to be treated as a fraudster? And one of the things that I just think we cannot make clear enough is that certainly the punitive measures are for those egregious examples, but can you confirm the treatment that somebody who needs to be away from work to take care of a loved one would not only be punished as a fraudster, but would likely actually be eligible to continue receiving the CERB?
Mr. Gallivan.
Yeah, thank you very much for the question. And you're right. The intent of the program is to support Canadians in a position of need. I think there's recognition in the fluid situation that the rules did change retroactively. So, for example, an employee who rightfully claimed the CERB only to find their employer claimed the wage subsidy after the fact, and then found themselves in double receipt of payment for the same work period. And so, in its external messaging, the CRA is trying to be absolutely clear that it understands there are people needing to repay the CERB who may have received it entirely in error through no fault of their own. Turning to the more legitimate, the fraudsters that were the focus of the conversation, I think it's worth mentioning that we have a public prosecutor in Canada, for example. And so, I was kind of asking the committee, I think, to trust me that the CRA would only apply this to cases that it's warranted. But on reflection, it's not just me that you would have to trust, but that the public prosecutor would apply the public interest test. So obviously, in the case you describe, the CRA has no intention to apply criminal sanctions to somebody in that scenario. And I think there's the added protection of the public prosecutor service who has to apply a public interest test. And obviously in this case, there would be no public interest in bringing public criminal charges in that kind of scenario.
And I think for some of those cases that we're dealing with people who are actually entitled to the benefit as well. I'll make one more question, Mr. Chair, if I've got 30 seconds, or am I okay? During the previous testimony before this committee, we heard about frankly, what I would have thought was unachievable administration of the CERB, processing 1,000 applications a minute. I think I don't have it in front of me, but I seem to recall that EI applications were somewhere in the range of 5 per minute. what lessons do we have to learn on the administration of social supports, and are there strategies we can borrow from these the phenomenal delivery of these emergency benefits in an emergency situation that can be applied in a non-emergency situation going forward? Because quite frankly, the people who come into my constituency office that seem to have trouble with these programs are navigating a Byzantine structure to achieve a mishmash of federal and provincial supports, and are often living in poverty. Are there lessons that can be taken from this effort that could be applied to help those people going forward?
Who wants to take it?
Mr. Chair, I can start,
Okay.
and I believe Mr. Vermaten will be able to complete. So definitely living through COVID and seeing how quickly we could deliver on these emergency measures, we've learned a lot. And one of our motto going forward is, what good can we take going into the future in terms of how to manage programs in the agency? But perhaps Mr. Vermaten can offer more insights into that.
Mr. Vermaten.
It's Mr. Gallivan here, Mr. Chair. Mr. Vermaten sent me an email saying he got disconnected. So perhaps
I don't see him on here. I'm looking for him. Go ahead.
I can return the favor and answer something in his space. We had embarked on a People First initiative within the CRA to try to design our programs and kind of business practices from the taxpayer perspective, including talking to taxpayers. In the case of the CERB, no time to do that. But in the case of the wage subsidy, for example, we had actual citizens focus test the tools we were applying and brought stakeholder groups in. It's something we had started before COVID, but certainly something we'll continue after, which is bringing stakeholders and citizens into the design of the program to give us feedback before we implement.
Excellent.
Okay,
Mr.
thank
Chair,
you.
just quickly before I wrap up, I just want to say it is Public Service Appreciation Week. There are millions of Canadians who are better off for the work that you have done, folks. Thank you so much. The people I represent are still have a roof over their head, largely, and food on their table, in no small part because of your work. And I want to say thank you on this occasion. Thank you, thank you, thank you.
Thank you, Sean, and we'll second that sentiment. Mr. Lemire, and followed by Mr. Julian. Go ahead, Mr. Lemire.
Merci, Monsieur le Président.
Thank you, Chair. In the documents proposed in the library document, it says the 2016 budget, $351 million over 5 years for CRA in order to combat tax havens and other disingenuous practices. In the previous comments, these budgets have also been increased, I believe. How much money is being devoted to the agency to fight against tax avoidance, avoidance and tax evasion in your budget?
Or Ted, I wonder if Ted wants to take that one.
Oui, j'étais juste pour mettre
Yes, just thank you for the question. We'll continue in French. In our global budget, 900 million, we're talking half is used to fight against abusive practices, whether it's internationally, among the rich or the richer Canadians with aggressive tax planning. So that's a large percentage, 450 million approximately. Well, I can give you an exact number in a moment, but generally speaking, it's 50% of our budgets. There's 1,200 international corporations and a couple of hundred Canadian ultra-rich. Over the same period, you mentioned that over the 5-year period, you hope to recover $7.4 billion. How did you arrive at that number, $7.4 billion? And is this still currently valid? Well, you're talking about recovery and not fees or charges. Now, there are two things that are different. We based our analysis on past performance and past results. What's the marginal ratio of our results? It's a risk-based approach, of course. And so when we take a look at planning, for example, the regional results will be in a downward trend. And on that basis, we will provide estimates. Just before the COVID pandemic broke out, our estimates, well, we managed to capture the amounts that we had forecast. But that was before the COVID epidemic broke out. Well, undoubtedly, some businesses can be identified fairly clearly. But you might be having difficulty in finding ways to get that money back. Now, for example, the emergency funds or the wage, the CWS, should we have perhaps sanctioned these companies and not allowed them to have access to these benefits as if they were under suspicion? Well, as for the wage subsidy program, the rules of the game were fairly clear based on the legislation, and there you are. If we see someone has a past record of abusive tax planning, can we say, we have to recognize that this program is established to help employees, not necessarily the business. So we examined closely what that company was doing, and we wanted to make sure that it is a program that does go through to the employees. Well, the minister has often offered us, when responding to questions, in countries such as Denmark, they were quite forward-thinking. They had laws that allowed them to identify and isolate these fraudsters. Could you propose or suggest any other legislative changes that might help you to increase the number of in recovery? And well, there's work to be done as far as legislative measures goes. Outside of these special emergency benefits, we're going forward quite well. Look, Loblaws, for example, despite all the work made by our agency, there's a tax court that's saying, according to the current law, tax planning, whether it's aggressive or not, if it's fair game, it's fair game. So beyond the crisis, there's other ways to close loopholes in order to get to the objective that we all share. Can you tell us what these loophole measures are, or what activities are going on that are being used? In fact, we all know about tax havens, for example, Barbados or others. Are there particular characteristics of the digital economy, for example, that can lead to abusive practices? Well, before talking about digital, I might point out a few items that concern the agency. Well, whether it's Luxembourg or Barbados, we have certain protocols and agreements. And I think our roadmap and our record before the courts has been quite good. As far as multinationals are concerned, when we start getting country-by-country reports, OECD, for example, Luxembourg was involved in a troubling number of situations. A lot of Canadians have trust accounts in Luxembourg, and some of these might be dubious. Is it time to review our particular protocols with these countries? Perhaps it is. Well, I think my time is probably up, and I want to thank you for your work. It's absolutely essential so that Consolidated Fund gets the revenues that it deserves and doesn't lose too much money. Thank you very much.
Thank you all. I believe we're going to Mr. Julian. Internet in the country, sometimes so much fun, I get kicked off. Peter Julian, floor is yours.
Thank you very much, Mr. Chair. Thanks to our witnesses, and thank you for your service to our country. For public service, we have remarkable individuals. I appreciate that. I'll start off with a comment, just following up on Mr. Fraser's questions. We already know that fraud is covered in the criminal code. We already know that the police can prosecute, and we have several cases. If you look do Google search, you can find cases of fraud that are being followed up on right now and prosecution. So I'm just going to put aside the idea that there needs to be some draconian enhancements to force people that have gotten the emergency benefit to penalize them, put them in jail, fine them. Already the criminal code covers that. So I think that comment is important because I don't like this dialogue that somehow penalizing people that are in desperate straits, putting them in jail, when if there is systemic fraud, they can be prosecuted already. That is the solution, and that's why we certainly won't support any draconian provisions in any omnibus legislation going forward. That was my comment. My questions are around the auditor provisions. There's $27 million, I believe, for enhanced auditing through CRA. Could you tell me how many auditing positions that would represent?
Okay, who wants to take that question? But CRA officials also have the right, Peter, to comment on your comment if they so decide.
It's a free country.
Yeah.
Thank you, Mr.
Go ahead,
Chair.
Mr. Gallivan.
Thank you, Mr. Chair. I'll answer the second question first, and I will accept your invitation. Thank you. 270 auditors, roughly, and our ramp up was definitely in the space of multinationals, high net worth individuals, but we also leaned into the real property sector, a very complex issue, and CRA doesn't necessarily want to take ownership for the escalating home ownership costs in Toronto and Lower Mainland in Vancouver, but some work there, and also around sales tax and organized crime, trying to use the sales tax regime. So roughly 270 FTEs and spread across all of our programs focused on kind of aggressive non-compliance. I think to the point about law enforcement, Mr. Chair, and for the information of the committee, the point is valid. Law enforcement does have the ability to pursue these cases, and we have seen in many communities local law enforcement taking up CERB fraud. Our experience and the challenge is there often has to be a nexus with more violent crime, a nexus with distribution of drugs. And so those local law enforcements have to make prioritization decisions, and they often prioritize more violent crimes or crimes that have a broader impact on the community, as is their right. And that would explain this difference of opinion in terms of own CRA powers or not. And so it is the case that I'll stop now so there can be a follow-up.
Thank you very much. Because I just want to go to the issue of prosecution of fraud, tax fraud, tax avoidance. The Parliamentary Budgetary Officer last year told us it's $25 billion that that the federal government loses every year. That was the conservative estimate they made at the time. I am sitting here in New Westminster, BC. Right next to me is the International Consortium of Investigative Journalists, their offshore leaks database. And I just want to ask about, because it's very detailed, it has all the list of Canadian corporations. I want to start with the Panama Papers. How many of the corporations named in the Panama Papers, part of the offshore tax leaks database, have been charged by CRA?
Thank you, Mr. Chair. Thank you for the question. We have confirmed publicly that we have a small number, and I believe we've confirmed publicly there are 5 criminal investigations underway. At this point, given people's legal rights and the aggressive criminal defense in these cases, we haven't brought any to the charges of laid face.
Okay, thank you. I just wanted a quick answer. Now, the Paradise Papers are also listed here, hundreds of Canadian corporations. How many corporations in the Paradise Papers have been charged?
Again, I think we haven't confirmed publicly the exact number that we have under criminal investigations. I think the point needs to be made, though, that many of these sophisticated taxpayers paper over their tax planning with multiple legal opinions and law firms. And so I think it's not for a lack of willingness on the part of CRA to pursue these cases criminally, but I think it's the forethought of the perpetrators to kind of really paper over what they are doing to make it very difficult and complex to bring out criminal charges.
Well, and that's my point. So nobody's been charged in the Paradise Papers. I know for a fact nobody's been charged in the Bahama Papers. The Isle of Man scam, CRA's response was what? In terms of the Isle of Man scam, how many of the corporations involved have been charged?
So again, I think in all three cases, or four cases, Panama, Paradise, Bahamas, and Isle of Man, 100% of the taxpayers named were risk assessed by the audit function. And based on the facts and the current jurisprudence and current Canadian law, we believe we took whatever action we could. In the case of Isle of Man, every single taxpayer who was found to be non-compliant with Canadian tax law has been put through audit. And both kind of tax and gross negligence penalties are being levied. And so I would say that the facts of that situation have driven the CRA response.
Okay, just a very quick question to end, Mr. Chair. So $27 million obviously is not enough, and the draconian powers shouldn't be given to go after widows and students. They should be given to CRAs so that the big tax cheats can actually be charged. It's appalling that the hundreds and hundreds of corporations, not a single one has been charged. And so would it not be better to put a lot more money into auditing and to have powers given to CRA so they can go after the big tax cheats?
Does anybody want to? Well, I'll ask the question a little more directly, maybe Peter. Is it the intent of CRA to go after widows and students?
No.
Okay. We'll turn to Mr. Cumming, followed by Ms. Petrakis, Mr. Cooper, and Mr. Fragascatis, and then we'll end. Go ahead, Mr. Cumming.
Well, thank you, Mr. Chair, and thank you for the CRA officials to be here today. In budget 2019, CRA will receive $50 million over 4 years to create this dedicated audit teams for high-risk regions such as BC and Ontario regarding real estate. Today, what's been the return on this investment so far?
Thank you for the question. I know that just before COVID, we had reported that we'd exceeded $1 billion in gross reassessments, and so I think that's the direct economic impact. I think the community, the real property community, some real estate agents, lawyers involved have also gotten the message that it's a higher area of coverage, and so it's not always a positive that our ROI is going up and we've exceeded $1 billion. It's sometimes positive when you see people changing in their behavior, which is one thing we're after. And so with some of these latest amounts, we were starting to go a little bit higher in the food chain, away from flips and individual real estate agents, maybe to the broker or the developer level. And so I think as our work changed, we've also been trying to get up to the influencers, because really what we're trying to do is send a message that the CRA will continue and the government will continue to devote resources to non-compliance in the real estate sector. That we do have the analytics. We have excellent support from our provincial partners in terms of sharing data, and we intend to stay in those sectors until we actually see a decline in our ROI, which is really what we want to see: people paying the tax they should up front.
So along the same lines, there was a budget amount of $350 million provided in 2016 over 5 years to improve your ability for audits and for tax collection. Can you give the committee the information that would indicate that you've actually seen an improvement, and how great of an improvement that's been since 2016?
Yeah, so overall, across a couple of budgets, we were expected to gross $5 billion in additional tax revenue non-compliance identified. As of March 31st of this year, we should have been at $3 billion, and in fact, we were at $4.4 billion. So $1.4 billion ahead of where we projected to be in terms of identifying non-compliance and sending out a bill. The court system, on the other hand, is feeling the strain. The Tax Court of Canada reported a 70% increase over a recent period in complex cases, and so we're seeing that some of the fight that was around the CRA identifying non-compliance is now shifted to the Tax Court of Canada and the Federal Court of Appeal. We're doing more to get our audits ready for litigation up front. We're doing more to make sure that our appeals function and colleagues in Department of Justice have funds. But I think there are real pressures now with colleagues in Justice because we're more successful in identifying people who are non-compliant, but they're not just kind of rolling over and paying us. And so in some ways, this has become a legal fight around CRA access to information and then the tax bills. And so in some ways, that's a strategic win that we have a lot of cases in front of the court where they need to be, perhaps, but we're a long way from winning those legal fights and having the capacity to successfully defend those in justice.
So I want to go to the client action incentive plan, where my colleague asked some questions regarding what's being paid out versus what is being brought in. And it's clear to me that we're collecting a tax, and the assumption is that we're going to give it back to the people. It was cherry-picked in family of four, very specific circumstances around that family. Are you able to say that every individual in Canada, when you assess this tax, including whatever the increases in prices would be, because a lot of the suppliers of goods and services have to build this into their pricing models, that they are ahead versus what the tax is?
Who wants to take that, Ms. Caron or Mr. Truman, I guess?
Sure, happy to take that. And just to clarify, there certainly was no cherry picking. Those are the rates that apply in the provinces to all individuals that qualify. So those are of general application. And certainly, is every single person better off? It would depend on the rate of usage of fuels within a family. So there may be circumstances that change, but on average, the design of those rates is intended to return to families more than they would pay with respect to the fuel charge.
But is it fully loaded? Is it fully loaded, including all costs? Because what I hear from a lot of businesses are that because of the taxes imposed on them, they've had to increase prices, and those prices, of course, are paid by the consumer.
Mr. Truman, can you take that? That'll be the last question, James.
Sure, thank you. So it's intended to return to families more than the costs of the fuels that they consume. I'm not sure how many rounds of multipliers that would take into account, so that might be a question better directed to Department of Finance.
Okay, thank you both. Ms. Koutrakis, followed by Mr. Cooper. Annie?
Thank you, Mr. Chair, and nice to see everybody from CRA again this afternoon. There are always calls to go after taxpayers who are evading taxes, and a lot of resources are rightly being put into this effort, as you stated in your opening remarks, Ms. Caron. On the other hand, what resources are you investing in educating or making it easier for many Canadians who are doing their best to pay their share of taxes, but who perhaps cannot afford to hire tax specialists, and must navigate through very complex tax rules and may face the risk of not following the rules. Is there any program in place that would help the smaller taxpayer?
So we do have some outreach activities, and perhaps Mr. Vermaaten can offer more details. We also have a community volunteer program that is out there across the country to help a number of taxpayers, low-income taxpayers, to complete their tax returns and get access to the benefits that they are owed often. So I wonder if Mr. Vermaaten can offer perhaps more information.
Sure, I'd be happy to do that. And there's as Janine had said, there's a range of programs there. I think for low-income individuals, the Community Volunteer Income Tax Program helps low-income Canadians, and that program typically is helping 800,000 to 900,000 low-income Canadians a year. So that's a very important program. We also do a lot of outreach in terms of trying to educate taxpayers, both in terms of their obligations, but also the benefits they get for filing, that they get the GST, Canada Child Benefit, all those things. We also have recently launched a program called File My Return, which allows lower income Canadians to file by telephone, because not everyone, like you pointed out, is going to be aware of all the tax rules, nor are they going to be comfortable with all the technology, so they can file via telephone. And we also work with the software companies to produce affordable tax programs for people. So what you'll see out there is the market has really provided a wide range of free tax programs, which have a lot of advice built into them, and that we examine closely to make sure that they're getting the right calculations. So I think those are just some of the things that we're doing, and I think it is helping a lot of Canadians file their taxes.
Well, that's great. I'm really happy to hear that. Do I have time for one more question, Mr. Chair?
Yep.
So in the 2020-21 main estimates, the CRA is requesting funding of $74 million for capital expenditures and recoverable expenditures under Vote 5, which is an increase of $45 million or 63% from last year. Can you provide details with specific examples on what this increase represents?
So I'll take that question, Mr. Chair. So these are the investments that we do in the many systems that we have in the agency to deliver the tax programs. And one of those systems is the benefit program systems. That is currently operating in quite an aged infrastructure. And so we have a multi-year project to be able to upgrade the system and have it more nimble and more modern. And so the increase is really because we need to invest our own dollars into that benefit system. So it's the main increase. We have also a number of systems that help support many of the compliance activities that are led by Mr. Gallivan, accessing tools and data from third parties, for example, to inform our risk analysis.
Okay, thank you all for that. We'll split the remaining time, about 4 minutes each, for Mr. Cooper and Mr. Fragaskatis. Michael, you're on.
Right. Thank you, Mr. Chair, and thank you to the officials from CRA for being here. Just looking at the estimates for CRA over the last several years, the main estimates have been relatively stable, 4.1 billion in 2017, 4.2 billion, 4.2 billion, 4.5 billion. Obviously, there's been a big increase, but that's due to the climate action incentive. But in terms of actual expenditures, there's each year starting in 2016 through 2018, 2019, a fairly sizable and growing gap between the main estimates and then actual expenditures, $300 million, then $500 million, the $900 million in 2018, 2019, which is 21.8% more than was provided for in the estimates. Do you have any explanation for why there's this growing discrepancy?
So I'll take that question, Mr. Chair. So often the main estimates do not reflect the amounts that...
I understand that. I'm just saying it just seems like... to be clear, I totally get that. I'm just saying there may be a very good reason, many reasons for it. I was just curious because it is, I mean, stable on the one hand and then growing each year.
And maybe we'll get an answer here, Michael. Go ahead, Ms. Curran.
Yeah, so the main estimates amount often do not reflect the amounts that are voted in prior years, either to the main estimates or the supplementary estimates, and then not spent and available for spending in the following year. So those spending really reflect, I believe, the amounts that are available to the agency, legitimately available through parliamentary approvals, but not necessarily reflected in the main estimate. So that's often one of the reasons why. Last year in 18-19, one of the big change was that the climate action incentive started to be paid through the 2018 tax system. And therefore, there was a $660 million of expenditures in the climate action incentive.
Mr. Cooper.
Okay, thank you for that. Just with respect to the climate action incentive, following up on a question that had been asked by Mr. Morantz in terms of a reconciliation and the fact that no reconciliation has taken place. When will that happen? And I guess perhaps that is a question that could be posed to finance, but I don't know if any of the CRA officials could elaborate further on that.
So, Mr. Chair, I'll start, and if Mr. Truman can offer. So we're responsible for collecting the revenues and for paying the climate action incentive. We will produce at the end of the fiscal year, which we're working on right now, a statement that will show the fuel charges that we've collected and the climate action incentive that we've paid. We will provide that to the Department of Finance, and they will do the reporting as they are responsible.
Mr. Truman, do you want to close out that round?
Thank you. Nothing to add. That's correct.
Okay, Mr. Fragascatis, you will wrap it up. Couple of questions.
Thanks very much, Mr. Chair. Thank you to officials. With respect to the effort, and I'm quoting here from Budget 2019, the plan was to create 4 new dedicated residential and commercial real estate audit teams in high-risk regions, notably British Columbia and Ontario. Just wondering to what extent these audit teams have been collaborating with provincial authorities in Ontario and BC. And if you wish to give other examples from other provinces or the territories, that would be welcomed as well.
Great. Thank you, Mr. Chair. I'll take this one. So yeah, all 4 teams stood up in those areas of the country, certainly showing the highest risk. The team approach is linked to that BI concept, where we try to look for patterns in the data and trends, and again look for those common denominators. And so you can imagine a condo building going up. What we'll try to do is look at every single condo. How many times did they flip? Who were the principals? Who was involved? And yes, data on land use from the provincial governments, both the province of BC and Ontario, have been very, very helpful. And also collaboration with provincial partners who may signal certain buildings that are or developments that are more problematic. They also pick up intelligence from things like worker safety, and this idea that a construction company that plays fast and loose with the safety of its employees may not be all compliant with their tax obligations either. And so we actually have kind of subcommittees, working groups with colleagues at the provincial level, where we tell them what our results are, and they talk about areas that may be of interest to us. And yes, info sharing from those 2 governments really important. And I think some mixed results outside of those 2 provinces. I think we have some good results with some provinces, and with some others where we haven't been active, maybe not as much information as we want.
Can you, Mr. Gallivan, explore just in a bit more detail the nature of the collaboration? I mean, how exactly do the audit teams interact? Who does what? What's the nature of the relationship? And in fact, maybe in partnership sounds like a more apt description, because what you're describing sounds like a very close working relationship.
So we have to be mindful of information sharing agreements, and so yes, it's true.
No, that's fine. But I mean, in general, I mean, obviously, I'm not going to put you in a compromised position, but it's one thing to say that we're working together, but I think on behalf of taxpayers, how exactly are you doing that?
So internally within the CRA, I think what we're trying to do is bring data from some parts of the organization to other parts of the organization. So a really quick example is you're trying to get a GST, HST home renovation credit or the GST, HST rebate on a new home. Normally, we used to look at that in isolation. But with these advances in data analytics, we look at that and say, well, does that make sense? You're reporting income that you can't sustain. You're saying you have 8 kids for child tax benefit, but you're buying a 1-bedroom home. And then pushing up the food chain into developers. And we see through these claims that maybe a developer who's reporting building only maybe 5 or 6 houses a year has clients saying, no, they actually built 60. So I think a lot of the partnership focus for us has been that internal partnership. And with the province, more leads and data, and in particular data on real property transactions.
Okay.
That it, Peter?
It can be it, Mr. Chair. There was one more
okay, give
quick
a quick
question.
One. Yeah, go ahead.
It relates to the funding for the taxpayer ombudsman. What is the funding that's requested for that position for 2021? Is there a figure you can give?
So I believe, yes, I believe it is. Let me see. I believe it is 3.78 million dollars for the fiscal year. 3.780.
Okay. Thank you very much.
Thank you for that, and thank you for appearing on the estimates. Mr. Fraser made the point earlier on the public services and our appreciation to all that the public service does for Canadians in this country and the efforts you make. And I want to, we see Ted Gallivan about every few days and Mr. Matten, it seems, on this committee over the last several months. So I do want to, on behalf of the committee, give a special thanks to CRA, to its staff, and to your families as well. This working from home is not necessarily easy on families all the time either, and so certainly thank the staff throughout the department and your families and yourselves for your efforts. So thank you for appearing today and answering our questions.
Thank you, Mr. Chair.
Thank you.
Good.
Thank you.
And with that, we will see committee members on Thursday. Meeting adjourned. Take care.
Merci.